think we could have an employment and productivity boom and a real change.
Recovery in the United States, supported by the fiscal stimulus, is fully in the price.
We are looking not just at the peaks, right? We are looking at the sustainability of these trends.
There's a worry that we're getting into bubble territory, but at the same time, it's also essential to be there.
It looks pretty clear to me that the Fed is not raising rates till at least probably the end of 2022, 2023.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures down 16 on the S&P 500. We declined 0.4%. All the feels of a summer morning, Tom Keene. As my good friend Guy Johnson would say in London, today's about exchanging ideas. Quiet news flow elsewhere.
Well, also an abrupt reversal from yesterday. I thought yesterday we came out of the weekend with really interesting non-correlated market, and with a vengeance today, John. Correlated here with yields, as you know, coming back nicely. The real yield comes back nicely. And there's that dollar weakness.
The debate in the mix, Tom. HSBC, Steve Major, 1%, reaffirming that view this morning. Kit Dukes of SocGen reaffirming his view that euro-dollar gets out towards 125, 130 year-end. Some interesting calls in the mix, Tom.
Well, they're in the mix. Lawrence Dyer, working with Steve Major at HSBC, says, look, what we're getting wrong is we're looking at the immediate, and critically, Dyer and Major go along the x-axis in their analysis. And we've got the perfect guest coming up to talk about this. They say we've got to take a longer average view, which is what the new Federal Reserve System is doing. They're not looking at 1 quarter, 2 quarters, 3 quarters of data. They're looking out 2 years, 3 years, 4 years of yield and inflation data to come up with their conclusion.
Lisa, lower for a whole lot longer.
Well, if you take a look at the structure here, I mean, I've been talking about the amount of debt. We all have the amount of debt that's been incurred after the pandemic and to survive the pandemic. That has a lag effect on inflation. That has a disinflationary effect. You have an aging population still, disinflationary. This, to me, is the conundrum. Can we still get inflation without a change in some of these structural underpinnings, John?
Big debate today. Jim Karen and Morgan Stanley joining us to kick that debate off this morning.
Perfect.
Looking forward to that in a couple of minutes' time. Let's turn to the price action just briefly and whip through things for you on the S&P 500. A slight decline, down 17 on the S&P. We're off by 0.4%. I feel slightly hungover, except I haven't been drinking. Yields 160.30. Sometimes it takes a while to wake up, Tom. You know that feeling?
Well, John,
he doesn't know that feeling at all.
Honest here. We're all doing this. We're all doing this together, and India is truly blowing up. The Philippines, really grim data. And part of it is people got to get off their butt and go out and get the first and the second shot. And John, you did that yesterday with your second shot.
And I feel slightly hungover this morning for it.
Yeah, but I feel like that every morning.
Light at the end of the tunnel for different reasons, Tom.
Wait, it was
Pfizer
John.
For me,
John,
something else for you.
It was a transitory shot.
Euro-dollar 120.59. Let's round this out, TK.
Yeah.
Up about 0.2%. It's a stronger euro in the mix. A story of divergence for Q1, Tom, and now convergence as we go deeper into the year.
Yeah, it is. There's a lot of correlation set up here. I'm going to go to DXY 91.02, John. We did get a 90 print. 89 would be stunning. Renminbi back under 6.50.
And Lisa, there it is. Crude inching towards a 64 handle on WTI.
This is the tension. You see that inventories are actually coming down dramatically, and yet you're seeing demand pick up, which really raises some pressures for the price of crude. Today, what am I looking for? I'm looking for the very slow news action in Apple holding its very first product release of 2021, AirTags. I love this idea. You stick them on your kids, you lose them, you can find them with your iPhone. The idea here is that you can track things digitally with a little chip. I love this idea for when you're feeling perhaps a little hungover, just saying. Anyway, 2:45 p.m., President Biden is going to be speaking at a South Carolina electric battery facility. This is really interesting to me after Secretary of State Tony Blinken's comments yesterday about how China is getting the upper hand and taking advantage of some of the opportunities from climate change that the U.S. should be getting an edge on, basically batteries, some of the technologies that could combat this and be used to reduce carbon footprint. How much will the U.S. try to get ahead of that, and how much will Biden reveal about that today in the speech? And today, after the market, Netflix will report their first quarter earnings. I'm interested to see how much of the pandemic boom is fading, how much of the subscriber numbers are going to plummet as people can actually go out and do other things rather than just look at the screen.
Yeah, I watched Mank for the third time over the weekend.
How did that work out, Tom?
It worked out great. Eric Messerschmitt's black and white. Everybody should see it just to see the use of black and white. They purposely put in the movie mistakes, artifacts, so you really think it's an old-time movie.
Thanks for that, Tom. I'm looking forward to watching that later. Can I say something about Netflix credit? The balance sheet is much better, Tom. In the last 12 months, we're talking about a company that's gone deep into junk, and now we're talking about maybe investment grade. I think Moody's has it one step into junk. Some of these companies, quite phenomenal.
Yeah, and John, what's so important is the thundering silences if their grand strategy actually works out.
Exactly.
No one's...
Burn the cash. Burn the cash. You don't hear much of that.
Spend it.
All right, you guys are trying to tweak me, which is basically saying, look, all the people who are naysayers about Netflix, there are good stories here.
I'm looking, it's like the Queen's Gambit. It's a surveillance gambit, John.
There are some good stories out there. Did Lisa just say there's some good stories out there? Something like that.
Oh, come on. Let's move
on.
Three
of us about a drink.
Before he walks away.
Jim Karen with us now. Morgan Stanley Investment Management Fixed Income Portfolio Manager. Jim, let's start with credit, shall we? Some of these companies, some of this universe is actually stronger than it was 12 months ago. Jim, some people struggle to see that. Can you just explain it for us?
Yeah, it's all about cash flow, right? So effectively what people were able to do in the last 12 months is with rates so low and the aid of QE is that many corporations were able to refinance their debt for longer terms and at lower interest rates. And what we also have to recognize is that as the economy recovers, you get this cash flow that starts to come back into the market. That cash flow for a bond investor is key because that's what's going to keep default risk down. So as the economy is growing, and we expect it to grow this year, next year, and in the year following. And as that cash flow stays very, very positive, and as long as we don't expect interest rates to rise substantially, consistently over the next several years, and that means that the refinancing risk of all the debt that they've taken on is still going to come at a very, very low rate. And right now, spreads are tight, as you've been pointing out. And as long as that doesn't widen so much, it basically sets up for better interest coverage rates, meaning the amount of payment that you have to pay on the debt that you have outstanding. So those start to look better, especially with the backdrop of an expectation of a better and growing economy with more positive cash flow. So that's why credit's doing well.
Jim, I want you to synthesize the x-axis. It's HSBC on it today. Your Ellen Zentner's been great, Matt Hornbach's been great, etc. I want you to synthesize the game of guessing the when of this and the duration of some of these arguments about we're going to see higher yields, we're going to see lower yields. How's the x-axis play in?
Well, the way that I think about it is that the tails are fat on both sides. So effectively, yes, we have a lot of monetary expansion and there could be some inflation risks, and all of those risks have gone up because of what we're doing. But on the other side of that, what we have to question is that have things structurally really changed? Where we were prior to the pandemic is that we had structural disinflation. And the reason is that we had an aging population, which is demographics, we had technology and all the other factors that have been pushing prices lower. Has that just magically gone away? Has the aging population, has the technology and everything else, is that really gone at this point? And if the answer to that is no, then those structural factors are going to reassert themselves and do at least keep yields from rising out of control or excessively high. Now, if we start to get, over the next 12 months, if the data starts to, slow down, which we do think the rate of growth will start to slow down over the next 12 months, but still stay positive, will it be enough to generate consistent de-anchored inflation? And that's the question that we have to ask ourselves. It's not, is inflation a risk? Yes, it's a risk. It's always a risk. Can rates go up? Sure. But is inflation becoming de-anchored where we expect growth rate of prices to consistently move higher over this year, next year, the year after that, and the year after that? And once that gets ingrained in psychology, one can think that, yields could stay high. But until that starts to happen, I still think that we're in a relatively low yielding environment. And I can't dismiss a tail of 2% move in the 10-year Treasury, and I can't dismiss a tail of something closer to 1% either. It really just depends on how all of this unfolds.
And Jim, that's the rate story. Going back to the credit story, and I'm really glad that John brought up Netflix. It's a great story. And frankly, it has survived and thrived during the pandemic. There are also the stories of United Air, which came out yesterday and said it would stop stopped losing money only when business and international travel recovered to 65% of where it was back in 2019, which seems like a tall feat given the pace of vaccinations. Would you say overall, on average, the majority of companies have a better balance sheet now than pre-pandemic? Is it 50-50? How is the overall profile based on where it used to be?
I think it's just like you said, it's very idiosyncratic, right? So it depends, if you're looking at the cruise lines, if you're looking at the airlines, you're looking at some very, very specific sectors of the economy that were very, very hard hit by the pandemic. When you look at, say, the broader industrials, when you look at, say, paper packaging, when you look at other areas, we could even look at leisure, all of these areas can start to actually get, better balance sheets to the extent that they have been able to, many companies have been able to refinance their debt for longer terms and at lower interest rates. So in that sense, there's a cohort of companies that are out there that do have stronger looking balance sheets, and that's mainly in the investment grade sectors. And I would say that many of the financials actually have come out looking like they have a lot stronger balance sheets. But then there are other sectors still, like the reopening sectors, the sectors that get the hardest hit. So these are, as you pointed out, the airlines and some of the cruise lines and things of that nature that that's really going to depend on the vaccine, the rollout, how quickly that happens, how quickly people are willing to get back on an airplane and start traveling, which, by the way, I think will be pretty quick. I think the speed at which people return to that will be faster than most people think.
Jim, it's good to catch up, sir, as always. Jim Carey, Morgan Stanley Investment Management, Fixed Income Portfolio Manager. Lisa, it's not about going from bad to good. It's about going from bad to less bad. It's gone from bad to less bad. That's what matters to markets. You know that.
Yes.
It's from bad to less bad.
Without a doubt. And there is justification for where yields are, frankly, even though we are at post-crisis tights on spreads, even though we are at all-in record low borrowing costs for CCC and lower rated companies. What I'm trying to raise is, are there some sort of long-term implications as a result of this? I'm not saying the default rate's going to pick up. In fact, Fitch actually just lowered their default rate for this year, John.
That's been the direction of travel now for the last, 6-9 months. For much of the credit universe. I can't believe we've done 11 minutes of this program.
Yeah.
And not done it yet, Tom. Do you want to do it?
Well, we're going to do it right now. We're going to do it right now with what matters, which is Diego Llorente. I have no clue who this Spaniard is, but John, Leeds tied Liverpool last night. Explain to our global audience why Leeds stuck it in the Super League year.
That's the beauty of football, isn't it? That you have a club like Leeds that's come up from the lower tier, Tom, advanced to the Premiership on merit and is doing really well in the Premier League. And the voice of concern is that not enough with that would happen if we had a European Super
We are so
League.
sophisticated.
Aren't we just? I mean, you really sold it. Who's
Lisa, I have no clue what I'm talking about.
That?
From New York City this
Leeds?
morning. Good morning. It's in the north of the country, Tom.
North, above Watford.
I'm going to take you up to Leeds. We'll have a good time.
South of Watford?
It's north of Watford, Tom.
Thank you.
Equity futures down 19 points on the S&P 500. We're
Nailing
down
it this morning.
0.4% Getting it together slowly. We'll do that with Phil Camporelli at JP Morgan in the next hour. Got no idea what the next 48 minutes holds. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. In Minneapolis, the jury resumes deliberations today in the murder trial of Derek Chovan. He's the white former police officer accused of killing a black man, George Floyd. In closing arguments, Chovan's lawyer says the viral video of him kneeling on Floyd's neck doesn't tell the whole story. Prosecutors argue that Chovan violated department policy and training. In Germany, Armin Laschet has won the battle to lead Chancellor Angela Merkel's conservative bloc in September's election. That follows a potentially damaging contest with insurgent challenger Markus Söder, who conceded. Laschet is the chairman of the Christian Democratic Union. He would be likely to continue Merkel's centrist policies if he wins. Shares of Ibm are higher today. The company reported its biggest revenue gain in 11 quarters, driven by demand for cloud services. That suggests that CEO Arvind Krishna's turnaround plan is starting to gain some traction. Krishna has focused on the cloud and artificial intelligence to revive growth. And former U.S. Vice President Walter Mondale has died. Mondale served under President Carter, where he was seen as redefining the role in 1984. He was a Democratic nominee for the president. Mondale made history by naming a woman, Geraldine Ferraro, as his running mate. But he warned voters to expect a tax increase and lost to President Reagan in a historic landslide. Walter Mondale was 93.
things are shifting. There is pushback against China, including from many of its close trading partners, such as Australia. And it looks like multilateralism is slowly making its way back into Washington. Whether the world is going to buy Washington's move towards multilateralism after what happened over the last 4 years remains to be seen. But certainly China is going to be a very important player.
A really important conversation in the last 24 hours with Iswar Prasad, the Cornell University Senior Professor of Trade Policy. From New York City this morning, good morning, alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here's the price action this Tuesday morning, a couple of hours away from the opening bell, call it 3 and change. Equity futures down about 19 on the S&P 500, down by 0.4%. In the bond market, yields unchanged, still sub 160 at 159.77. Euro dollar, 120.55, some euro strength in the mix going into a meeting on Thursday with the ECB, and there's the 64 handle on WTI, up about 1 percentage point on the session. WTI $64 and up about 62 cents on the day. I want to turn to Nike in the pre-market just briefly if I can, guys, down about 1.7% in very early trading. Nike being downgraded to neutral from a buy at Citigroup. The company, the bank, seeing near-term pressure on Nike, on the sales and on margins as well, due to, quote, a slowdown in demand in China related to the Xinjiang cotton issue, Tom. So that's starting to show up in some of the analyst calls.
So they can't get the product?
For the stock. It's about a product boycott, potentially, on the mainland, Tom. That's been a conversation over the last month or so.
I'm lost. Interesting to see. I know that they're, I'm trying to buy stuff off Nike and you can't get it.
I should say potential product boycott.
No, it's fine. I'd also mention here today, this Apple announcement today is we're not really going to cover it all that much, but it's a big deal. And there's no way to put it. Their sitemap is down right now, and 9to5 Mac and others. Our Mark Gurman making clear this is a big, big deal today. Martin Schenker with us, our Bloomberg editor-at-large in the politics of the moment. Maybe it's China, Marty, that we focus on, but I want to go to Ukraine, or as the Ukrainians call it, the Ukraine. The fact is the many borders of the Ukraine are all now compressed by Russia as well. It's a first big test for the president.
It is, and not just the president, but for Europe and the alliance, which he is trying to restore. Look, there are over 100,000 troops surrounding Ukraine, Russian troops. The speculation is that perhaps Putin wants to provoke some incursion, citing, the defense of Russia. But his intentions are not clear, and it is a very dangerous situation.
What I find interesting about this is it all comes back to this World War II artifact, NATO. James Stavridis has been a good friend of the show, has made clear NATO still has a place in all this, whether it's Turkey or Ukraine or, frankly, even a projection of the Pacific. How does NATO fit into this? How do the allies fit in? What do our European sources say?
Well, Ukraine is not a member of NATO. They have reached out to the NATO
Well, that was
nations.
Almost a catalyst.
That was the catalyst for this. Yeah. And they have asked for European assistance to help thwart this looming threat. How Europe reacts, how the U.S. reacts is going to say a lot about what happens globally to international relations over the next 4 years.
I got to say, Marty, going back to China and the issue that John was raising about Nike and some of the conflicting messages out of corporate America versus the government of America. Xi Jinping was speaking at a recent forum over in China, and he said that the U.S. global leadership is waning, and it said that they shouldn't be asserting their power, and really reasserted their preeminence over the region and beyond. How is this being perceived in Washington?
Well, it's obviously a point of concern as well. It's interesting that Xi did not mention the United States by name, but everybody knows who he's talking about. And it's also interesting that he made a very strong call for multilateralism, the very thing that Donald Trump sought to undercut. So, mixed signals is actually a great way of putting it, Lisa. It's not clear what China wants from the U.S., a normalization of relations, but the Biden administration is not going back to a pre-Trump relationship. That's not going to happen.
I wonder, though, if the playbook really is what we're seeing with Nike, which is pressuring U.S. companies directly. And it's interesting to me that Tim Cook, Elon Musk, Ray Dalio, and Steven Schwartzman were at this conference attended by Xi Jinping. And there has been a direct outreach to big American corporations. Is this the strategy of the Chinese government at this point?
Well, this is where they have tremendous leverage, right? I mean, even the speculation about a boycott of products like Nike can absolutely have an effect on the share price, and as you're seeing this morning. So this is where China has tremendous leverage.
We've had Daniel Kurzweil coming up, who looked at China back to George Marshall in a definitive book from a couple years ago. Marty, do you perceive in all your years of following this that we really need a new dialogue with China? Or is it the same old back and forth, the ping pong diplomacy and argument that we've seen for years?
I absolutely think that we need to reset our relationship with China. And the Biden administration has made it clear that it wants to do that. But the contours of that relationship, based on China's behavior in the South China Sea and its stealing of intellectual property, how you deal with those in a constructive way is something that is going to really test the Biden administration.
Marty, it's always great to catch up with you, sir. Thanks for getting up early for us. Marty Schenker there, Bloomberg editor at large. Tom, this is the defining issue for the next several decades, perhaps, for the global economy and for foreign policy too.
Well, you see it last night. I was watching a lot of the Duterte speech last night in the Philippines, which frankly, John, is falling apart. They've had a horrific typhoon of the last number of days, the typhoon or storms of October as well. And now they have the storm of an increased pandemic. And then they have the South China Sea. And you can see it across all of Duterte's comments. It is front and center with the Philippines off to the east of the sea, what they call the West Philippine Sea.
We've certainly got a feel for the new approach, Lisa. The new approach is a multilateral one. It's not unilateral. What I failed to see so far, at least, is the new strategy. What is the new strategy? That's part of it, of course. But what's the objective here? To gain a foothold in the region. Haven't heard enough about that. Before the Trump administration, it was TPP. Now what is it? What does it look like?
And we don't have a sense of the firepower either. China's economy was the first to emerge from the pandemic. It's unclear, though, how much momentum there is behind that in the upcoming years. China's economy is growing more slowly. Does that reduce the capital they have to expand in the region when they're trying to upgrade their economic momentum? The idea here of giving more wealth to the middle class, of making some of the growth more sustainable over the long term and deleveraging, John.
The consumer base is so large now in the mainland in China, Tom, that this is the point of leverage for the Chinese Communist Party. And Lisa alluded to something that I think is so important. How do you get corporate America to come along with you in this quest to do something about some of the challenges the Communist Party actually poses right now? And I think that was difficult for the Trump administration. That's going to prove difficult for the Biden administration too.
I think you really touched on something here, and the nexus of this will be Hong Kong and the relationship with Hong Kong and, frankly, with Western banking here in the coming months.
Tom, how many companies wanted to comment on that on the record?
Yeah, they don't. You know,
we'd sit in Davos
talking about
with
English
these companies,
football.
we'd ask them about it, and they would bristle. You could see how uncomfortable they could get in real time just saying China and the Chinese Communist Party. They did not want to talk about it. Coming up, Dan Kurtzfehlen, the Foreign Affairs Editor. What a timely conversation just around the corner on this program. From New York City this morning, good morning, alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Equity futures this Tuesday down 18. We're down 0.4%. This is Bloomberg Surveillance. From New York City for our audience worldwide, this Tuesday morning, good morning, alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Here's the Tuesday morning price action. After losses yesterday, we take some more weight off the S&P 500 and pull further away from all-time highs. We're down 16 on the S&P. We're down 0.4% on the S&P 500. Outside of that, on the Nasdaq 100, down around about 1/3%. We switch up the board and get to the bond market just quickly. 2s, 10s, 30s. We'll take a little look, Tom Keene. 159.60 on a 10-year yield, coming in almost a basis point or so. Similar move on 30s at 128.79.
Very good, John. Thank you so much for that. Again, I'm looking at a weaker dollar today, really definitive. Lots of earnings coming out. Netflix later, and the Apple event this afternoon bears watching as well. Johnson & Johnson just out. I'm going to go to the Bloomberg terminal, world class, and the speed of those headlines, and just take a quick glance here. They announced a dividend boost to 5%. We'll move on from there with increased guidance for 2021. This is a joy. Daniel Kurtzfehlen went to the University of Jonathan Spence Excellence, also known as Yale University, and turned it into a China watch. He has been involved with government, including writing speeches for Secretary Clinton, and has now been anointed with the worst job in diplomacy, which is filling Gideon Rose's shoes at Foreign Affairs, where he has been named editor. Daniel Kurtzfehlen joins us this morning. Daniel, I want to go to the United States. I know Lisa's very much focused abroad. We had Adam Posen on with his nostalgia of America. Are we drowning in nostalgia right now?
I think you see this across both parties right now. There's so much focus on how we get back to economic strengths of the past that there are ways in which we're failing to realize the opportunities of the future. This Adam Posen piece, The Price of Nostalgia, focuses on the trade aspects of this. There's been this really fascinating shift against what had been a pretty strong free trade consensus across both parties for some time. And the narrative you tend to hear now is that we have done too much trade, integrated too much with the world, and that has reinforced inequality, displaced workers. Adam Posen's argument is that, in fact, for the last 20 years, when we've seen this period of rising inequality and stagnating wages across a lot of industries, we've in fact been retreating from the world, and trying to retreat further is only going to reinforce those trends.
Daniel, in honor of John Williamson dying here in the last number of days, the nostalgia of the Washington Consensus, everybody wants to go back to when it was cozy, when it was comfortable. What does our new Washington Consensus look like?
So you can see some of the outlines of this in the Biden administration. There's much more attempt to have the state, have the government that directs certain portions of the economy. There's much more focus on the international competition. I know you were just talking about the United States and China, but much more focus on how what country controls different parts of the supply chain, where semiconductors are manufactured, where green technology is manufactured. Those are going to be the battles of the future. Adam Posen and others in this package that leads the major issues of foreign affairs try to take a look at this that is not about just pulling these things back into our own borders or making these all kind of domestic industries, but really think about how we shape the global economy in a way that addresses those security concerns, but also realizes economic gains both for Americans in a broad-based way, but also that really shapes the global economy.
That's a lot of work to do, Dan. So let's pick up on that word consensus, how you establish consensus on an issue like the Chinese Communist Party right now, how you get the European allies to come along with you.
So this is, I think, the kind of key tension in the Biden-China policy. The Biden administration, I think in a way that has surprised a lot of people, came really out of the gate trying to set a pretty hard line on China. As I think one of your previous guests said, they made clear as they came into office that they were not going back to some pre-Trump consensus on engagement with China, but really continuing the hard line. Their change, the thing that they're trying to do differently than the Trump administration, is doing that with allies, whether that's Japan. You saw the Japanese Prime Minister in Washington Friday, whether it's with our NATO allies, with the Quad, India, Japan, and Australia, and our partners in the rest of Asia. The problem is that a lot of these allies have different views about how you compete with China. So you saw this on Europe most strongly. Europe was striking an investment deal with China at the same time that the United States was trying to craft this allied front against the Chinese Communist Party and against Chinese influence. So it's this very, very delicate balancing act where the United States wants to sustain this hard line, but it wants to do it with as many allies and partners as it can. And that creates a certain tension. This is really the strength of the United States, and I think the Biden administration has tried to keep this in mind. We go into this competition with China with an incredible range of allies and partners, both in Europe and in Asia and elsewhere. Yeah. China doesn't bring a lot to that fight when you think about it in those terms.
Well, let's build on that tension, though. The issue, as you know, through economic history, at the center of a global system is a hegemon that brings everyone else with them. Right now, we can't get the Chinese Communist Party to come with us. And that's the issue. The major miscalculation of the last several decades, and arguably laced with arrogance, was this idea that the Chinese Communist Party would want to be more like us, to embrace the system that we've all benefited from. And Dan, that's not going to happen. So I guess the issue that I have every time this comes up, and I'm always asking this question, what kind of system can we and our allies embrace if China doesn't want any part of it, doesn't want to play by the same rules?
That's a great point. And look, I wrote a book about U.S. policy toward China in the 1940s, and you can see exactly that mistake going back really toward the beginning of the American relationship with the Chinese Communist Party, with Communist China. this notion that with just the right amount of trade, the right amount of diplomatic engagement, the Chinese would really come to see the world the way we do. And back when I was writing about George Marshall in the 1940s in China, that was an illusion that we clung to pretty bitterly. You see that in some of the China policy of the 1990s and in the 2000s. This notion that with just the right amount of capitalism or trade or diplomacy, the Chinese would come to really see the world the way we do. And that illusion, I think, has fallen apart over the last 4 years. I think the question is, can you use competition? Can you use pressure from that coalition to bring the Chinese along? We're seeing something like that with climate change right now. The Biden administration is going to hold a climate summit at the White House on Thursday, and they've tried to say, look, we want the Chinese to come along. We realize that China is the biggest emitter of carbon in the world right now. The U.S. is the second. Only if these two countries are able to do something meaningful on climate change does the world have any hope of beating this challenge. But we can't try too hard to bring the Chinese along. We need to bring a kind of competitive edge to this, where we show leadership, we show an ability to shape the global action on this question. We're working with our allies, and that China feels really pressure to come along for its own interests, not because we expect that with the right amount of diplomacy, the Chinese are simply going to see the world the way we do.
And the global warming discussion is a bigger one that we're going to be having throughout this week. I do want to go back to the U.S.-China tensions paired with this disenchantment with the way that globalization really worked for a lot of people within the United States and elsewhere. What is the modern version of globalization that economists that you quoted and had in your magazine seem to think is the path forward?
So one really interesting element of this, I think when we talk about trade, we tend to think of, traditional manufacturing and steel, maybe services. There's one essay in this set of pieces on trade by Matt Slaughter and David McCormick. David McCormick's the CEO of Bridgewater. Matt Slaughter's at Dartmouth. They were both senior economic officials in the George W. Bush administration. They make the point that when you talk about global trade, increasingly we're talking about data flows, which have grown something like 100 times in the last 10 years. And that's really the future of global trade. That's a lot of what we're talking about. And we're talking about these conflicts over trade going forward. China is working very hard to shape global governance of data. They have this kind of techno-authoritarian model, which applies domestically, but also shapes the way they engage with other countries, the kind of economic model the Chinese are trying to bring to the rest of the world. And as Slaughter and McCormick argue, the U.S. really hasn't gone that far in trying to put forth an alternate vision of global governance. So when we talk about the trade battles of the future, there's likely to be about data as they are to be over, steel tariffs and the traditional trade battles that we're all pretty familiar with. And the question is, which of these global countries is going to go out and shape some kind of global policy about this? And this applies to everything from, how these are taxed to privacy and all the issues that we're familiar with domestically. Those are international issues as well. And only if the United States goes out and tries to build some kind of coalition, tries to put some kind of global rules to define data trade going forward. Otherwise, other countries are gonna step in and do that themselves, and that's probably not going to be a model. It's probably not going to be an approach that we're going to be especially happy with.
Just quickly here, I'm wondering, you're saying that people think that the U.S. is behind China in coming up with governance of global data. Meanwhile, Tony Blinken, Secretary of State, said that the U.S. was behind China when it came to taking advantage of new job opportunities resulting from fighting climate change. Is the presiding sentiment that the U.S. is falling way behind on a lot of the most important issues?
I think that's been the view over the past few years, whether that's on data, whether that's on the technology that goes into renewables, kind of green technology. This is, I think, at the heart of some of what the Biden administration is trying to do with its infrastructure package. We're having this debate now about what infrastructure looks like. Some of that is 20th century infrastructure. That's, roads and bridges. What I think most of us think of when we look at infrastructure. The Biden administration is trying to make this case that this really should be about how you renovate buildings to make them more energy efficient, how you invest in these future technologies. That's a politically fraught issue. We can go back to the Solyndra controversy of the Obama administration to see what happens when you make some of these investments that go wrong. But the case they're trying to make is that when we think about infrastructure, when we think about investments in ways that are going to be key to the competition of the future, whether that's on data and technology, whether that's on on renewables, that we need to think about these questions much more broadly than we have traditionally.
Dan, you and I and the team are going to be talking about this for a long, long time. Dan Kurzweil there, Foreign Affairs Editor. Great to catch up with you, sir. Tom, you were breaking that J&J news just before we started that conversation, so let's return to it just briefly. Announcing a dividend boost, increasing the 2021 full-year guidance as well. And Tom, just briefly, Johnson & Johnson reporting $100 million in Q1 of US COVID-19 vaccine sales. Along with this headline, I should remind everyone that J&J committed to making this a non-profit venture on the COVID vaccine front, Tom, but J&J reporting $100 million of US Q1 COVID-19 vaccine sales.
Oh, it's there, and we're going to see this along the way, and the debate's going to be huge on it. I would note that we're going to be looking at every single earnings or report. David Kostin saying it's a time for micro-analysis. He's right.
Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. We will talk about this pandemic up next with Dr. Amish Adalja, Johns Hopkins Center for Health Security Senior Scholar. With equities down about 0.4%, yields in almost a basis point on the S&P 500. We're down 16 points to 41.39. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Day 2 of deliberations in the Minneapolis murder trial that sparked a nationwide debate over police use of force. A jury is deciding the fate of Derek Chovan, the white former police officer accused of killing a black man, George Floyd, during an arrest. Prosecutors say Chovan violated department policy. Chovan's lawyers say the viral video showing him kneeling on Floyd's neck doesn't tell the whole story. In Congress, a rare show of bipartisan support for a piece of legislation. The House has passed a bill that would give state-authorized marijuana businesses easier access to banking services. Under current federal law, banks that provide services to marijuana businesses can be penalized. Russia is said to have moved 150,000 troops to the border with Ukraine, the largest build-up there ever. That's according to the European Union's top diplomat. That build-up raises the possibility of further conflict. We spoke to Ukraine's foreign minister.
This is a real escalation, and yes, I am deeply concerned with the potential consequences of that escalation for my country, and this is why we call on friends and partners to stand by us, not only in words, but also in deeds.
Meanwhile, the U.S. has warned airlines to exercise extreme caution when flying over Russia and Ukraine. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
They are rare events, and what countries are going to do about this will depend on the availability of other vaccines. It's going to be risk versus benefit, but it's the other problem, of course, is this is not happening in a vacuum. It's happening in the background of a very aggressive anti-vaccine lobby that's piling on now globally, and so that could easily derail a lot of efforts.
That was Peter Hodes there, the Baylor College School of Medicine, National School of Tropical Medicine Dean. I get all that out from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here's the price action this Tuesday morning. Defensive, with the equity market down 21 and down about 0.5%. Yields in a single basis point. On the S&P 500, we decline. On the bond market, your 10-year maturity just south of 160 at 159.24. Crude did have a 64 handle, back to 63, 63.74, and positive still, 0.6%. Euro stronger, dollar weaker. That has been the story recently, hasn't it? Euro dollar 120.53. Tom, a slightly stronger euro in the mix again this morning.
Yeah, the mix has changed here with the dollar weakness that we see in the yield dynamics. We had a real yield yesterday out to negative 0.81, and we're back to negative 0.77. So a little bit of a churn here and a more correlated tightness to the market here. Earnings in as well. Headline out, the leader of Chad for 30 years, Idris Deby, has died. We'll have much more on that later. And a merger just coming out, Dow Jones reporting Canadian National will go after Kansas City Southern. We'll follow that story as well. Right now in the pandemic, Amesh Adalja joins us with Johns Hopkins. He's been extremely good at giving us the pulse of the nation. Amesh, the differential here seems to be the United Kingdom doing well, the United States doing well, and the news out of India and the Philippines is just absolutely grim. Should we get used to this new polarity?
Definitely. I think most of us were expecting this to be the case as different countries had different vaccine rollout timescales. And we've seen these more contagious variants take off in certain countries. And if you don't have a vaccine to basically stay ahead of them or to staunch their impact, you're going to go back to where you were, what we saw in the bad old days of winter or the spring. So many countries are not going to have this controlled well into 2022. And that's why you saw, for example, the State Department increasing to about 80% the number of countries where there is there's a travel advisory saying do not go to this country. That's going to be the case until vaccine is in place in those individual locations.
I look at those individual locations, and they can also be the United States. A couple good charts overnight of the glide path of younger people, including Dr. Adalja. I should mention Jonathan Ferro having his second shot here in the last 24 hours. It's rumored he survived. And, you know, I look at the good news coming on, and it's the younger people coming on as well. What is your timeline where 20-year-olds and 30-year-olds in America will get back to the virus success that we see in 60 and 70-year-olds?
I think it's likely to be in midsummer or so before enough of those 20 and 30-year-olds are vaccinated. Hopefully now, with everybody eligible, everybody signing up, getting a date to go get vaccinated, or some places you can just walk in. Here in Pittsburgh, there are many places where you can just walk in and get a shot, just like the flu vaccine. That's going to make it very easy, and will likely continue to get more of this young group that's actually responsible for many of the cases that we're seeing right now vaccinated. And I think once we get to around maybe 40% of the population fully vaccinated based on Israel, I think we'll start to see a decline in cases the way they did. But we've already seen benefits in terms of hospitalization, as we've talked about before, because our older individuals who were taking up hospital beds, the ones who are most likely to have severe complications, and that's not happening so much anymore because how many of them have been vaccinated.
Dr. Adalja, what's the latest on transmission for people who have been vaccinated? In other words, whether they can actually pass the virus on to other people?
The data that we've accumulated so far shows this to be extremely rare. It doesn't mean zero, but it's extremely rare, and something I think people could be comfortable with in terms of not having to worry about being a carrier of this virus. Certainly, if there's an outbreak, you're not going to be looking at the vaccinated people to say, were they the ones that actually spread this? It's going to take some time for public health guidance to catch up. That's why we still have pretty conservative guidance for what vaccinated people can safely do. But to me, I think in terms of risk tolerance, I'm not worried about vaccinated people spreading this virus. And I tell people to go back to their life as much as possible once they've been fully vaccinated. I seem to be a little bit ahead of some of my colleagues on this, but that's how I think these vaccines are working. And we have real world data from many countries like Israel that show that transmission does go down. And there's even data from Pfizer that it's very hard to even be infected if you're fully vaccinated. So I do think they decrease spread as well as serious illness, hospitalization, and death.
Dr. Adalja, based on this two-tier inoculation schedule where much of the world is way behind the United States and the United Kingdom and Israel, how quickly can we see international travel pick back up?
It's going to be something that takes some time. There are going to be countries that have the ability to travel between each other easily without much friction, I suspect, like the United States, United Kingdom, United States, Israel, the Seychelles Islands, Bhutan, all those places that have got very, very high vaccination rates. But even for the United States and Canada, it's going to be some time. What will likely happen is vaccinated individuals may still have to quarantine or get a test before they go into those countries, and likely the same on the return back to the United States, even if they're vaccinated. So it's probably into 2022 before the world has some semblance of normalcy in terms of international travel, meaning all countries. There's going to be kind of green zones where vaccine uptake is high that make it very easy to go to, but other parts are going to be difficult, including places as close as Canada.
Doctor, it's always good to catch up, sir. Got to leave it there. Dr. Emma Shadalja there, Johns Hopkins Center for Health Security senior scholar, touching on something that the banks are talking about right now as well. The several waves of reopening, the path back to normalization will not come all at once, will it? It's going to take a while and maybe deeper into 22. Tom, I want to return to that breaking news just briefly. It comes from Dow Jones. I'm going to read their reporting to our audience. According to their sources, Canadian National Railway planning to make a roughly $30 billion offer, topping a bid for Kansas City Southern. Topping a bid because there's two bids on the table now. There was an agreement too. So these are the bids according to Dow Jones. Canadian National planning to offer $325 for each Kansas City Southern share, including $200 a share in cash and 1.059 Canadian National shares. The offer, a 20% premium to Canadian Pacific Railway's agreement, a roughly $25 billion deal reached just last month, Tom.
John, this is really interesting, and get out the map. This is something I follow. Full disclosure, we have shares in Canadian National. And John, what this comes down to is you got to go down the Mississippi River and you've got to go down the heartland of the Midwest. Canadian National of Montreal is way out front on this. They go across Canada, as you'd expect. And then years ago, they took out Illinois and go down the Mississippi River. Kansas City Southern, John, is essentially west of the Mississippi River, serving New Orleans and Houston. Canadian Pacific, the venerable Canadian Pacific, desperately needs to make this transaction work. So they go down the middle of the United States, and you have this blocking effort today by Canadian National.
Kansas City Southern in the pre-market, Tom. Lisa,
Ripping.
up by 20.9%.
Yeah, well, it makes sense given the fact that there's a bidding war. I got to say, it does indicate this new preeminence of the old world industrial economy that's coming back. You can see that in their share price, and you can also see, John, the appetite for consolidation at a time when infrastructure is such a big push.
Was that the first time that Tom actually acknowledged that he might be invested in something other than cash?
Well, no, it's not me.
Big Dog,
It's not me.
GameStop.
It's like relatives. No,
Okay,
I'm
it's
on
relative.
triple
It's
leveraged
vet
all
bill.
cash.
It's vet bill.
Just wanted to clean that up.
It's a trust for vet bill and kennel fee.
Lovely.
Yeah,
Coming
it's not
up,
me.
Bill Camprelli at JP Morgan Asset Management. Looking forward to that. From New York City this morning, good morning to you all. Equities lower 0.4%. No drama yet. This is Bloomberg.
We need to talk soccer.
I think we could have an employment and productivity boom and a real change.
Recovery in the United States, supported by the fiscal stimulus, is fully in the price.
We are looking not just at the peaks, right? We are looking at the sustainability of these trends.
There's a worry that we're getting into bubble territory, but at the same time, it's also essential to be there.
It looks pretty clear to me that the Fed is not raising rates till at least probably the end of 2022, 2023.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Getting back to work in the United States of America from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equities down about 0.4% on the S&P 500. Tom, where do you want to begin? We've got upgrades to guidance, we've got beats for earnings, and we've got a little bit of M&A potentially on the table too.
Yeah, huge news flow. And what I would say, John, it sums up to a boom economy. You've got a defensive strategy by Canadian National to take out Kansas City Southern as Canadian Pacific goes after them. You've got J&J saying, look, here's a dividend increase, 5%, not a big deal. And then you've got the anticipation of all these other earnings coming out. Our guest coming up here, I think, can really talk to us about the choices that have to be made in the coming weeks.
Well, let's talk about some of those choices on the table right now for some of these big companies. Procter and Gamble out with some numbers. Organic revenue plus 4%, the estimate plus 3.58%. But as our story leads with, Tom, this is going to be the story for Procter and Gamble. Increasing prices and passing on some of those higher inputs onto the consumer. How much more of that are we going to see as the year progresses? And where will the consumer price tolerance be beyond just some of the staples?
Yeah, we'll have to see where that is on a unit basis. But again, price comes up, unit sales are okay, maybe revenue. It's a mystery. You don't know where revenue is going to be. What I would notice in P&G headlines, the 2030 coming out across of Bloomberg, is about free cash flow and share buyback. John, what's undersaid right now is the mystery of use of cash. What are they going to do with all that money?
Well, apparently investors want capex, Lisa, and I'm still scratching my head about that because that's the change of the last 12 months. Apparently, according to the fund manager survey at Bank of America, it's not the buybacks they want. Tom, I'm with you. I'm skeptical too. It's the capex story that these investors apparently want.
Well, It's what the capex would bring. I mean, basically the idea here that they want growth that isn't priced in currently to share prices. John, you were saying it is a boom economy. And my question is, for how long, and has it all been priced in? I mean, HSBC's view of a 1% yield at the end of the year on a 10-year actually includes this boom economy, includes investing in risk assets until the second quarter, in which case, after that, things slow down. And that, I think, is why investors want capex. They want something to keep the momentum going well beyond this boom, John.
Trajectory and duration. We'll touch on that in just a moment. Let's get to the price action this Tuesday. We're shaping up as follows. In the equity market, just slightly defensive on both the S&P, the Nasdaq, the Russell. We decline on futures. We're down 16, 17 points on the S&P 500, off by about 0.4%. Into the bond market we go. Let's lift the lid on treasuries. Yields coming at a single basis point to 159.42. Euro just a little bit firmer by 0.1%. We hold on to that 120 handle, Lisa, going into the ECB meeting this Thursday.
And it is the potential for upside surprises in Europe after a lot of bad news has been priced in. Today, we are going to see the first product unveiling by Apple, which, just to remind everybody, is a $2.3 trillion market cap company, really highlighting exactly what we were just talking about, the desire for something new to drive momentum, to drive earnings going forward. After a lot of good news was baked in, it seems like this will be a very important event to sort of chart their next big thing following an incredible 2020. Then at 2:45 p.m., President Biden is going to be speaking at an electric battery facility in South Carolina. Interesting to see how he tries to set U.S. up for gaining some of the jobs, some of the growth stemming from combating climate change. The idea here that Tony Blinken put out yesterday, Secretary of State, saying that China was really getting the upper hand in trying to capitalize on this new green economy. And then today, after the bell, Netflix reporting their first quarter earnings. Interesting to see there the idea that subscriber growth is expected to plunge. Basically, we saw that incredible boost of people logging on, trying to watch anything they could to pass the time during the pandemic since they couldn't do anything else. Where does that leave Netflix going forward? Do they need to turn to advertising to boost revenues? How much can they potentially grow, John? And yes, it is a good company that has proved the naysayers wrong with all of the debt that they piled on with turning cash flow positive.
Nature is healing. Lisa's becoming a little bit more optimistic on selected names.
I've been a realist
selected
all this
names.
time.
Selected
her
names,
optimism is transitory.
You think it's going to fade quickly?
He just wants to drink.
I'm with you, Tom. I think it will fade quickly as well. Let's get to Phil Camporelli, shall we? JP Morgan Asset Management Global Allocation Portfolio Manager. Phil, can we start with a question we open this program with? As an investor, what do you want to hear? Do you want the capex? Do you want the capital returns? How company specific is that story?
I think it's CapEx, John, to tell you the truth, because that's an indication that companies are dealing with the environment, with the incredible fundamental story that we have, and adapting and catching up to that fundamental story after really depleting last year and trying to figure out where to stand. But, John, I would say that the story of this month, I know Tom thinks it's my Yankees getting off to a tough start, but it's not.
Right.
It's the drop in 10-year Treasury rates. All we heard in February and March as the 10-year Treasury was climbing 40 basis points a month was this is going to be inflationary. What the bond market is telling you right now is not so fast. Fed has the upper hand, and it's just another indication for us to be overweight stocks versus bonds, because this is the 10-year rates are going nowhere right now, even with all of this incredible data that we've seen over the past couple of weeks.
Do you like that, Tom? Do you like that? That's the PR school over at JP Morgan. You ask them a question, they spend about 5 seconds on it, and then they're gone somewhere else, just talking about what they wanted to talk about. I'm sorry, Phil, I should have started with the bond market.
Yeah, but John, that's the bigger story. That's the signal through all of this noise right now, is everybody that was so worried about that financial condition tightening, the inflationary environment, that's just not showing up right now.
Poor Phil, the general counsel's in his ear, John, saying it's part of a carefully balanced portfolio. Okay, Phil, you know that I'm death on beta. And I love your research note where you're saying this is not a year of beta. It's not a year of summary of indexes. It's active management, and that means security selection. Which ones do I want to own?
Yeah, so the security selection for us, the new information is the large cap value part of the world, right? So that's the airlines, that's the cruise ships, that's everybody. When they get the green light to go on vacation, they're going on vacation. That is a new sleeve that we put into our portfolio towards the end of last year, a sleeve that has gone up a lot, but a sleeve that we believe in. But I don't want to make this into, do you want to own growth or value. This has to be a combination because of what I said about rates. The only way that growth companies are really going to have a headwind in this environment is if you continue to see the march up higher in rates. But if rates stabilize, I can't. Another Yankees quote. Reggie Jackson said he's the straw that stirs the drink. The 10-year Treasury is the straw that stirs the drink, Tom. So in this environment, the security selection comes down to a combination of growth and value. But we still believe. Everyone is saying be overweight stocks versus bonds. The only people that aren't saying that are fixed income people. Everyone has the same trade on of being overweight, the beta, the stocks versus bonds. For us, it goes into, okay, what stocks are you picking? That's a large cap value trade. That's equal weighted S&P exposure. We never did that before. We never wanted all 500 companies. We just wanted the biggest, the cap weighted exposure. And now we're changing the tune a little bit because of this dramatic reopening story that we are in the midst of right now. We think that the second quarter is going to be a 9 or a 10% quarter. You just saw retail sales at 10%. Yeah. And in the world of again, rates stabilizing, just an incredible backdrop for stock pickers here.
And I will say, Phil, that your counsel also told you that when Tom starts talking, just talk faster and talk louder and barrel through. Just to pair, though, the idea of low rates being the main story and pairing that with CapEx, there is a question of the low inflation outlook of bond investors right now being paired with the incredible optimism of a dynamic economy being baked into stock prices, being baked into the hope for CapEx and the hope for something better and bigger going forward. Is there a dissonance here? The idea that there will be some sort of momentum and incredible inventions at some of these companies to drive economic growth at a time when growth and inflation really isn't expected to pick up over the longer term?
Yeah, Lisa, that's a great question. And this is really, for us, comes back to, is this a reflationary environment or is this an inflationary environment? And just to back up for a second, reflation is what we think we're in. And that's an environment where companies can grow. And again, the Fed doesn't have a 0% inflation target. The Fed has a 2% inflation target and higher because they're saying that they want this average inflation story, right? So that's the environment we think that we're in right now. The inflationary environment is that right tail risk. That's the tail risk. That's the risk that the Fed has to come in sooner rather than later. And that's not where we are. So, Lisa, we think that this is a reflation environment where you get to see inflation rates at or around 2%. And that's a good story for us. That's the
Phil,
goal.
We're about the statistics here. The dreaded Yankees are playing 333 April ball. They're like truly in last place. And even worse for you, Phil, the dreaded Mets. For those of you worldwide, the Mets is another baseball team in New York. The Mets are playing 636 April ball. That's pretty good. Phil Camporelli, thank you so much for being with us.
John, you've got to let Phil respond. No. We don't do that. We play fair, Phil. Go on.
You don't win championships in April, Tom. That's the bottom line. Just like you don't ask to allocate for today. You ask to allocate for a couple of quarters.
Yeah, unfortunately, I'm a Red Sox fan. I agree with you. Phil Camporelli, go away.
Thanks, Phil.
John, I just did that. John, I just did the baseball talk here because we've been soccer, English football.
Yeah.
And actually, I don't think we've done enough on this story. This is truly, for those of you in America, this is a ginormous story.
Do I call it 64-7 ball? Is that right for the Red Sox? Did I get that lingo right?
647.
647.
That's what you'd say, yeah.
647.
Yeah.
Is that good, Tom? 1-11 lost 6.
That's good, but it's April, and we know
that
we, based on history, it's...
Can I just say something about the football story, which I actually find really interesting?
Oh, here we go. Go on.
It's actually a debt story.
Okay.
To me, I thought that was really interesting. Yes, it's all about the finances, but the big teams that are joining the Super League are all highly indebted after the pandemic really ravaged their finances, which might have lit a fire under these tensions, which have been brewing for a long time, John. That is my understanding.
No, Lisa, you're dead on, and David Hellier with a great chart on this. John, the Tots go out, they build a brand new palace. They haven't won since time began. They run into a pandemic, I get it. So are the Tots saying we got to do this or we got to sell the team?
No, I don't think they're saying that just yet, Tom. They're saying we've got to do this to stay stronger. I'm not going to make the argument for them. I'm not advocating for either side of this. This one hasn't finished, let's put it that way. There is way more still to come from this debate that's playing out for the world of sports. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro.
John.
Go on, Tom.
The Duke of Cambridge came out against it, and so did Boy George. Come on.
Okay.
That really sways John's opinion.
Yields in a basis point. I think the Duke of Cambridge is an Aston Villa fan. 159.24.
Really?
Yeah.
I wonder. Let's get Mervyn King on.
Down
He'll
16.
straighten us
He is
out.
also a Villa fan.
I know.
Galvin
I
King,
knew that. I
down
keep
0.4 of 1%. I actually watched the game. I actually watched Villa Tots with him next to me, Tom. Long time ago. Years and years ago. From New York City. Why are we doing this? Futures down 15. We're off by 0.4 of 1%.
You know, baseball, football, coming up hockey.
This is Bloomberg Sports.
Canadians, it's over.
With the First Word News, I'm Ritika Gupta. In Minneapolis, the jury resumes deliberations today in the murder trial of Derek Chauvin. He's the white former police officer accused of killing a black man, George Floyd. In closing arguments, Chauvin's lawyer says the viral video of him kneeling on Floyd's neck doesn't tell the whole story. Prosecutors argue that Chauvin violated department policy and training. A challenge from China's President Xi Jinping. He called for greater global economic integration and urged the U.S. and its allies to avoid, quote, bossing others around. Xi didn't mention the U.S. by name, but he said that one country shouldn't set all the rules. In Germany, Armin Laschet has won the battle to lead Chancellor Angela Merkel's conservative bloc in September's election. That follows a potentially damaging contest with insurgent challenger Markus Söder, who conceded. Laschet is the chairman of the Christian Democratic Union, and he would be likely to continue Merkel's centrist policies if he wins. And Johnson & Johnson posted better than expected first quarter results, plus the company raised its financial guidance for this year despite that setback for its coronavirus vaccine. J&J is waiting for a ruling from U.S. health regulators on whether use of its vaccine can resume. It was halted last week after reports a small number of people who received it developed blood clots. Former U.S. Vice President Walter Mondale has died. Mondale served under President Carter, where he was seen as redefining the role. In 1984, he was the Democratic nominee for president. Mondale made history by naming a woman as his running mate.
I don't think trade tensions have never left. It's just the tone of discussions. I think that will change. And both sides, I think at the very least, notwithstanding what happened in Alaska, they do want to make sure that things don't escalate further. There are areas of disagreement, but as we've seen on the climate side of things, there are areas where they can cooperate as well. So I think trade tensions per se, we wouldn't expect too much upside risk to markets, the sentiment from any improvement, but I don't think we're going to have any deterioration there as well. And I think the markets will overall be happy with that.
That was Jeffrey Yu, the BNY Mellon Senior Strategist for Europe. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your Tuesday morning price action shaping up as follows. We're down 19 on the S&P, 41.36, and off by almost 0.5%. Yields in a couple of basis points now to 158.89, 63.44 on crude. We did have a 64 handle. We're still positive by about 0.1%, but off session highs. And in the FX market, the euro just about showing some strength, Tom. Euro dollar up a little more than 0.1% to 120.55.
Lots of to talk, John Farrow, to Jack Fitzpatrick about our Bloomberg government reporter. Jack, I want to talk about Vice President Mondale. And what has not been noted in many of the reports was his colossal defeat to the conservative force that was Ronald Reagan. It was unimaginable at the time that he would only win District of Columbia and barely win his Minnesota as well. Are we now, with the death of Walter Mondale, where maybe we're switching back to a more government, a more moderate-centric Washington, away from the conservative thrust we've seen for 30 and 40 years?
I mean, if you look at the big picture in politics and how politics connects to economics in the U.S., Mondale's big loss and the dominance of Reagan in the 80s, it was more than just 2 elections or even 3 elections, counting George W. Bush carrying that on. The focus, if you talk to Democrats, especially if you talk to people in the Biden administration, is, I think, more of a big picture pushback to austerity, to a more limited government role, and trying to kind of redefine the Democratic Party's approach in a more FDR kind of sense.
Well said. And the SALT tax right now is a nexus. Folks, for those of you worldwide, this is where President Trump went after the Democrat states, and said, I'm going to play with the taxes, so you have to pay more taxes. That's a third rail right now, Jack. Who's going to win that battle?
It's very hard to say because the margins are so close. Democrats are at least hearing out these New York, New Jersey, California members, even the progressives who see a change here as somewhat regressive because a lot of this money would help wealthier people. Republicans obviously don't want to see that. I think ultimately it depends on, are they going to go a totally partisan route, the Democrats, on tax measures to pay for this, or are they really going to try to make it bipartisan? If it's partisan, it seems like they can fit in this SALT change. If it's bipartisan, it's really hard to do the math on getting the votes in both the House and Senate.
There's a question also how President Biden is trying to get through the green aspects of this deal that are thought of as less necessary or less infrastructure-y. Yes, I'm going to make that a word. And we're seeing President Biden speak at a South Carolina electric battery facility later today. How much is this gaining traction in red states, the idea that the U.S. needs to invest in jobs of renewable sources of energy to move the U.S. into a dominant role in fighting climate change?
So far, in the context of the infrastructure bill, it's still been pretty negative talking to Republicans. They want a proposal that is much more old school, traditional infrastructure. But I would note that when they talk about pay-fors for this bill, they have at least started talking about essentially a gas tax for electric vehicles, a per-mile fee for electric vehicles, which is an indication they're at least willing to talk about some of these measures on electric vehicle infrastructure, that kind of thing. But broadly, Republicans, one of the big problems Republicans have with what Democrats are trying to do is the climate-related and non-roads and bridges related portions of the infrastructure bill.
Jack, can you give a sense of which industries, of which types of companies in the U.S. could benefit from U.S. financing or tax breaks or something to incentivize spending on fighting climate change? The idea here of electric batteries, of perhaps nuclear power plants, perhaps solar. I mean, what are we seeing being talked about the most in Washington, D.C.?
A lot of what we've talked about in the context of this next big bill, at least, and what Congress would work on, is a little more on the transportation side than the power side. That doesn't mean that that's out of the question for future executive orders or things that would happen under the Clean Air Act. But as you, I think, mentioned, anything on batteries for cars, the charging stations, really, I would say broadly, the focus is, in that regard, has been more on transportation infrastructure, more so than anything big on nuclear, for example.
We're almost on the edge of May. What does May bring? I mean, within the Fitzpatrick calendar of infrastructure-y Washington. Thank you, Lisa. What does May bring?
May not bring that much on all of this stuff. They're moving slowly on this bill. The goal is to actually get this done by July 4th. The pace they're at now makes me think that that might be ambitious. I do think in May we're going to learn more about the little parochial things that lawmakers want. They're gathering requests for earmarks that they could work into this bill and other authorization bills for transportation. So we may learn a lot more detail about the politics of how this plays out. But in terms of seeing a bill become law, May is not going to do it. We're still a little ways away from finding an agreement and actually seeing them push this through.
Jack, we've got to go. It's always good to catch up, sir. Jack Fitzpatrick, Bloomberg government reporter down in Washington, D.C. I want to return to a story that came out about 24 minutes ago, Tom. It was Procter and Gamble out with a beat on earnings. The buyback boosted from approximately 10 billion to approximately 11, to be precise, from up to 10 billion to approximately 11 billion. But this issue on price hikes is something we've got to stay on top of here at Bloomberg in the United States of America. Looking at raising prices on several categories, and as we've seen, as Gerard Porter, our reporter here at Bloomberg points out, we've seen this from Coca-Cola in the last week that expects prices to go up. We've already seen it from Kimberly-Clark as well. Now P&G out there saying rising commodity prices, and we're going to pass this on to our customers.
John, I'm the most non-discerning grocery shopper there is. I go in, I look at Tang, I buy my Tang. I go in, I look at Sanka, I buy my Sanka, and that's it. If the price moves on those two items, it gets my attention. Guess what? The price is moving on Tang and on Sanka.
Thanks for that, Tom. Lisa, a serious issue.
It is a serious issue.
It is.
And without, people are going
John,
to start talking about inflation.
Tang?
All right, keep drinking Tang and saying, and
on,
maybe
John.
something else. I don't know. It's all transitory, Tom.
Tom, you and I have talked about Tang many, many times before.
Tang is its
The
own
point
animal.
you're getting at, though, is we're talking about staples. Staples.
I'm talking about a Tang
Hold on a
mimosa.
second. And it's good inflation versus bad inflation, right? It's bad inflation if wages don't go up at the same time and if it just simply crimps the lower income workers. I know you're shaking your head because I somehow managed to paint this in a bad
You're priceless for making this serious.
What's great is
I tried. I gave up 20 seconds ago.
I saw Tang mimosa open.
All right, let it go off the rails.
Tang is a staple in the Keene household.
They were great, sensitive.
Is it really?
This is Bloomberg.
No, it's not.
From New York City for our audience worldwide, this is Bloomberg Surveillance. I like this part. I get a bit of space. No one interrupts for about 10 seconds. Futures down 18 on the S&P 500. We're off by 0.4%. On the Nasdaq, we decline. On the Russell, we decline. We're down 0.7%. Talk so much about the cyclical trade fading over the last several weeks. Small caps peaking back in the middle of March. Lisa mentioned the airlines earlier. Keep an eye on the airlines, down for 9 straight sessions on the S&P 500. We'll touch on that in just a moment. Switch up the board and get to the bond market. I can feel it. I can hear it. Here he comes. 2s, 10s, 30s. Yields down 2 basis points at 158.71 on a 30-year, down to 228 and off by 2 basis points as well. We spent a lot of time talking about the relationship between the United States and global growth. We've gone from divergence through Q1 and now a real conversation about convergence. So finish on this. Switch up the board, please. US 10s versus German 10s. Through the first quarter, wider. Then, Tom, comes the convergence. This is the conversation for Q2. How much tighter can that spread get?
Well, it's there, John, but, I think this is really, really important. It's not only the absolute move of German yields, one indication along that euro to 125 call, but, John, as you say, the relative or compare and contrast move in the 10-year is the transatlantic divide.
As Europe starts to improve just a little bit, Tom Keene. We'll talk about that through the hour as well. Let's get some movers, a little bit of M&A detail in the mix too, and we'll talk about Tang, Tom, just for you. Romain, good morning.
All right, well,
let's
talk about railroads. We don't talk about railroads a lot here.
Big deal.
Pretty big deal here. Kansas City Southern. Of course, we talk about Canadian National coming in with a bid for $325. Remember, they already had that deal with Canadian Pacific for $275, basically a 20% premium. So now you have competition in this space. This is a big deal because when you talk about just the general idea of cross-border rail traffic and how important that is to the future of these railroads, KSU has already done a pretty good job. It's been a huge outperformer of the other U.S. railroads, primarily because of its access into the Mexican market. A tie-up here with Canadian National, this would create really a behemoth that can go out of Canada into the U.S. and into Mexico and back again.
First thing I thought about this is, does it run into judiciary, Department of Justice or antitrust kind of stuff? Because Canadian National would be absolutely dominant.
Yeah, well, keep in mind, the Canadian government had already raised some issues about the Canadian Pacific bid, so it's kind of curious that Canadian National would now come in with a higher bid, thinking that somehow it wouldn't face some of the same antitrust concerns. That's on the Canadian side. The U.S. really hasn't weighed in on this, but most of the sell-side analysts seem to think that this is going to be a pretty big uphill battle to get this deal done.
Interesting. What else do you have?
Well, you had a big deal here with regards to Altria and, of course, the concerns here about clampdown on nicotine use and regulations here in the U.S. You had IBM earnings last night. Interesting. They're getting a little bit of a bid here. And you get here in the pre-market, IBM, of course, had earnings last night. It was a big deal. Arvind Krishna, he's been there for a year. there was a lot of concern here about whether he could really take that cloud strategy to the next level. Remember, when he was there under Gino Raimondi, he was really responsible for the Red Hat acquisition and a lot of that cloud strategy. It was a cloud strategy that, frankly, lagged its peers. They're finally showing some signs of life there, though they did get a little bit of a boost here from an FX gain. But the share is getting bid up here in pre-market, up 3%. Elsewhere, Nike down a little bit here in pre-market on a downgrade over at Citi. And Virgin Galactic, interesting move here, down to 2056, down 8.5%. Look, I mean, had a big news here coming in overnight. Cathie Wood, two of her funds actually sold off about 590,000 shares. Keep in mind, this comes on the back of Richard Branson selling off 113 million and Chamath Palihapitiya last month selling off 200 million. A lot of investors really kind of scratching their heads and wondering why all the main sort of players in this world right now seem to be taking a little bit of their profits
Romain,
off
you're
the
going to
table.
be on air this afternoon for the Apple soiree. Is this a normal soiree or is there something different this time?
Well, it's normal. According to Mark Gurman, he's basically said that this is basically going to be a minor update of iPads and a couple of those iMacs here. He doesn't really seem to think that this is going to be a huge thing that moves the needle here. Some of the suppliers might move.
Okay.
Keep an eye on Corning. The glass apparently is a big deal here, and Corning is a supplier, GLW. That could move.
Very good. Romain Bostic, thank you so much. What we try to do here, folks, is we are an international show. We pay homage to the early morning of the United States of America. So we digress. We rip up the script right now with James O'Sullivan, TD Securities Chief U.S. Macro Strategist, because he's from the other side of the Atlantic, along with Jonathan Ferro. John, the mail has come in. It's been crushing
What are they
here
asking you?
about orange squash.
Yeah.
I mean, I got British people telling me about orange squash. It is no competition, far superior to Tang. John Ferro, what is orange squash?
A very concentrated syrup, a concentrated juice which you dilute with water, Tom. And you have a nice orange squash. So that's what we call orange squash. Made by many, many manufacturers, but Robinson's perhaps the most famous in the UK for doing just that.
Thank you. It was good to know that. And
Anytime,
so we
anytime.
Move forward here.
That's what I turned up at work this morning for.
No, it's
Just
our,
that.
you know, it's our cultural mandate here. Jim O'Sullivan deciding whether to walk out. Jim Caron did that earlier with Morgan Stanley. Jim, good morning to you. What have you done with your boom economy numbers? You've got trophies across the mantle. How have you tweaked your boom economy analysis?
Hi, Tom. Hi, John. Oh, good morning. Well, it's still, I think it's still moving. I mean, right now, obviously, the numbers look very good. I mean, we did just bump up a little bit the first quarter to 5% from 4%. I mean, the January numbers were quite good. February was affected a bit by weather. And then March was booming, of course, because of the nearly 10% rise in retail sales in March. So first quarter, we've got 5% for GDP. That'll be out in a couple of weeks. I mean, we'll see where we go from here. I mean, right now we've got 5 for the second, but I have to say that does look too low at this point. So it does look like, the first half of the year is going to be very strong. I mean, there is a question how much of this is strength that maybe is borrowed to some extent from later in the year. But clearly there's reopening going on. There's stimulus happening. And I mean, you don't want to extrapolate these numbers, but right now the data do look very, very strong.
You're being modest because Jim O'Sullivan, folks, is award-winning on a ridiculously predictive basis. Can you predict CapEx? Can you actually look out with the O'Sullivan crystal ball and figure out what capital expenditures will be?
Well, I think they tend to flow from the economy in general to some extent in terms of broad demand. It's been holding up pretty well, of course. I mean, it's been pretty strong. And I mean, in general, most parts of the economy right now look pretty good. I mean, I think maybe some of what you're even counting in capital spending is what people are spending at home, just the way those numbers are counted. And I think in general, going forward, it's going to be the services parts of the economy that will pick up the relative strength compared with goods. I mean, the goods numbers are just so strong already. I mean, there's been a big net increase during COVID, but it's really the services side, I think, going forward that'll carry the strength much more so.
We've seen that for a number of months now in the PMIs, Jim. We'll get the PMIs a little bit later this week. And I imagine within the PMIs, once again, the numbers, the subset, the sub-indices will stimulate a conversation about higher input costs and a struggle to hire, a struggle to get people back to these companies in a big way. How are you reading that situation right now, Jim? Just the hiring situation?
Well, right now the numbers are strong, obviously. We had 900,000 in the last employment report. But of course, payrolls are still down 8.4 million from pre-COVID. So I think there's a lot of room for growth there. I mean, you go back a year plus ago when the unemployment rate was 3.5%. And of course, a lot of these surveys were showing difficulty in finding workers. I mean, despite that, the inflation numbers were still pretty tame. I mean, the wage numbers were edging up a bit, but not dramatically shooting up. And at this point, I think we do have a looser labor market than we had before COVID. So there is a lot of scope for the payroll numbers to come back. And I mean, I think there's always going to be pockets of tightness in the labor market, but there's a lot of people unemployed still. And obviously the 6% unemployment rate understates that because of the drop in the participation rate. When you adjust for that, it's more like a 9% rate. So I think, yeah, there's a lot of scope for the employment numbers to come back strongly in the next couple of months. And you're still left with a higher unemployment rate than before COVID.
And Jim, this seems to underpin this belief that, yes, inflation will pick up, but not materially and not over the longer term. We won't see that acceleration in inflation continue. This 1.59% 10-year yield, what is it saying about the nature of the economy going forward? What does it say about the pricing of riskier assets and how sustainable they are, not this year, maybe not next year, but beyond that?
I think, I mean, there's been a lot of talk certainly about the Fed letting the economy run too hot and inflation overshooting and too much stimulus and all that. But I mean, there's certainly been a pickup in inflation expectations embedded in the bond market, but they're not, I would say, excessive. Certainly from the Fed's perspective, they're not excessive. And I think people are generally taking the Fed's word that they're going to be pretty dovish. I mean, the markets have moved forward somewhat over time, the pricing of Fed tightening, but I think people are still assuming that the Fed is not going to have to or be able to tighten dramatically in this economy, just given where neutral rates are. And so again, I mean, a 1.5, 1.6% bond yield obviously is still very, very low.
Is there something about that reaction function, though, Jim, that will actually force them to get back to neutral, wherever that might be, maybe more quickly than they had to in the previous cycle?
Well, I mean, ultimately, it'll depend on the data. And obviously, they've told us they're going to move later than in past cycles. They're not going to be preemptive. They're going to wait until inflation is clearly over 2%, and they want maximum employment. I mean, in the end, I think the real key is going to be the inflation side. And so clearly, they have a number on that. They need at least 2% inflation and above 2% inflation on a trend basis. And I'd say we're still a long way from that. So, I mean, obviously, there's a lot of talk about tapering first, because tapering comes before tightening. But, I mean, tightening, we would say, is many, many, many years away still.
Jim, it's good to catch up. Good to see you. Jim O'Sullivan, TD Securities Chief, US Macro Strategist. Tom Keene, a year since negative crude prices. A year ago, we opened up that day at $17.73, and we closed at negative 37.63.
I'm so glad you bring it up. We were remote at the time, folks. We were working out of our houses. And John, remember that day where you could hear the sound of that sort of that leaden thud of two full oil barrels in the Abramowicz living room? I remember that. I'm like, what the hell is that?
Can I just say, kids...
At this point, Lisa, you can say whatever you'd like.
My kids
and you do not need permission.
My kids initially were a little concerned about the fumes, but then they came to a profit-sharing agreement with me, and they've been doing phenomenally. They've been able to go out and buy mochachinos.
Or did you unload it at some point?
No, I unloaded it at a key point.
Yeah,
and there was only so much that Child Services would allow me to do.
For anyone newly acquainted with this program, recently or in the last 20 minutes, or you tuned in accidentally this morning, most of this isn't serious. I just want to make sure everyone knows.
I appreciate that, John.
This is a very different culture of doing news in this country that
Twitter is
I'm not acquainted with
Twitter
either.
is lighting up with a surveillance analysis of Tang. Shane, thank you for giving me Mr. Simpson.
Wonderful.
I figured if anyone knew where to get some Tang,
coming up in the next hour, a fellow Brit, Ben Laidler, will be joining us, a Toro Global Macro Strategist.
Barreling through.
Looking forward to that, alongside Tom Keene,
we'll do Sanka
Lisa
tomorrow.
Abramowicz,
Sanka.
I'm Jonathan Ferro. Equities
Sanka was
are down.
undrinkable.
Bond market's got a small bid. Euro's stronger.
John, first time I had a decent cup of coffee.
Different shows, isn't it? It's three different shows. It's unreal. From New York City, beautiful New York City.
It is.
41.41 on the S&P. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Day 2 of deliberations in the Minneapolis murder trial that sparked a nationwide debate over police use of force. A jury is deciding the fate of Derek Chauvin, that's a former police officer accused of killing a black man, George Floyd, during an arrest. Prosecutors say Chauvin violated department policy. Chauvin's lawyer says the viral video showing him kneeling on Floyd's neck doesn't tell the whole story. Tobacco stocks plunged after a report that the Biden administration is considering a move to lower the nicotine content of cigarettes to make them non-addictive. Marlboro producer Altria lost almost $6 billion in market value yesterday. British American tobacco dropped as much as 6.6% in London today. In Congress, a rare show of bipartisan support for a piece of legislation. The House easily passed a bill that would give state-authorized marijuana businesses easier access to banking services. Under current federal law, banks that provide services to marijuana businesses can be penalized. And fans are driving Dogecoin higher even as other cryptocurrencies struggle. The satirical token rose 17% over a 24-hour period from Sunday through Monday. And at the same time, Bitcoin fell more than 3%. Today has been designated as Doge Day, and supporters are pushing for record highs. And Wells Fargo is joining major Wall Street banks in rewarding junior bankers. Analysts will get special bonuses of $10,000 and associates will get $20,000 for fielding a surge in business. In a memo, Wells Fargo referred to unprecedented deal flow and client activity. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Both Elon Musk and Mark Cuban are pumping it up. It doesn't really have a purpose. It's got a community, and maybe they can keep value there. I would be very, very, very worried if one of my friends was investing in Dogecoin at these prices.
That was Michael Novogratz there, the Galaxy Digital founder and CEO from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. This Tuesday, defensive price action. Your equity market slightly lower on the S&P 500, down 15, call it 16 points lower. We're off by 0.4%. A breaker 160, we stay there, yields in. A basis point 159.42. And in the FX market, euro dollar 120.58. Going into Christine Lagarde, the president of the ECB's news conference this coming Thursday, and decision. We're positive there, about 0.2%. I said keep an eye on the airlines a little bit earlier on this hour. The S&P 500 airline sector is down for 9 straight sessions. United down another 3% in the session, Tom. Just a pullback after a stellar run for that particular sector.
Well, I'm glad you bring it up, John, because John, I would emphasize that today is not yesterday. I think there's a whole different character to this market, and maybe it's that nervousness of the earnings tip by tip by tip.
John, today is not yesterday.
Well, I get what Tom meant, but after the last 2 hours, I just can't tell if he's being serious or if he's joking. By definition, that is true.
Futures negative 15. The VIX is out to 18.37. But there's a different character because you don't do earnings as a rule on Monday. Coke yesterday, yeah. But we're now into the the step by step of earnings season.
Whether the bar is too high, I think, is the broader story, Tom. Lisa mentioned it earlier on in the programme, whether the bar is too high and how much have we already priced in. And I think we got a flavour of that, a taste of it last week. Now, I'm not unwilling, of course, to extrapolate that out through the rest of the year for the next several months. But I think last week got everyone's attention. CPI higher than expected, at least in the economics community. Similar story for retail sales. And what happened with bonds? What didn't happen with bonds? Bonds were bid. Yields were lower.
As what we do here is we do storytelling in the journey of Bloomberg surveillance, story to story. We continue that this morning with Edward Vanderwalt of Bloomberg Markets. Eddie, it's about Dogecoin, but that's old news. What's news this morning is Venmo, PayPal will allow me to buy Tang through PayPal using my cryptocurrency. What kind of spread do they make on that? I mean, I don't even know. There's a bid and an ask, but how many ways is Venmo, PayPal going to make money off people using Bitcoin to buy Tang?
Oh, absolutely. And this is not just Venmo and PayPal, right? I think it's everybody that's really in the custody business of Bitcoin. Because if we look back at the history of Bitcoin, custody has been the big problem. If you have it on your home computer, you can get hacked. It can be stolen. You put it on an unregulated exchange, it gets hacked, it gets stolen. So you get people like Coinbase that will sort out the custody fee. But in exchange, they give you these massive bid-ask spreads. Yeah. And we've also seen, with exchanges in South Korea where you've seen these massive premiums, and that's purely because in many ways your coins are locked up and it's a hassle to get it from one place to another, and that's right. And therefore you're locked in. Yeah,
John, I think this is a huge. Thank you, Eddie. I think this is a huge deal, John, and that the spreads that we're talking about here are no relation to what we know in the markets.
Is that a feature or a bug, Eddie?
Well, it's a feature for the it's a feature for the exchanges. Certainly, they are doing great on both sides of the trade. And really, these should be very liquid assets. But the problem for the exchanges are for a long period they have to take the other side of the trade because they bulk off, and because the network is so slow that they can't immediately put the transactions through, and they can't immediately lay off the risk. So they end up with some of that risk on their books, and they want a premium for that.
Eddie, the bid-ask spread is so wide, and it's got to be attracting the JP Morgans and the Goldman Sachses and the Morgan Stanleys of the world. I mean, they must be salivating over this opportunity. How much competition will Coinbase have in a year, 2 years, from the major banks that just can't let this opportunity go?
Oh, 100%. I think absolutely. I think but not just the major banks. If you look at Robinhood and how cheap trading has become on Robinhood, and you look at how expensive it is on Coinbase, you got to say that there are going to be so many other players that are going to say, hang on a second, there's an opportunity for me here to get into that business. So I think that is the problem for Coinbase. I think for Coinbase and investments like them, they are going to start seeing some real price competition. And then the question becomes, is it even worth staying in that business? We shall see.
We've seen a number of companies, WeWork, PayPal, of course, Tesla, say that they will accept Bitcoin as a form of payment. How much is this becoming an increasing trend versus a number of high-profile companies looking to increase some of their reserves in Bitcoin and using this as a way to advertise?
Yeah, I think that's a big part of it. I think Elon Musk is nothing if not a master marketer, and as good an engineer as he is. But I think saying that you will accept Bitcoin as payment, it attracts a lot of attention. And the same, putting Bitcoin on your books, it attracts a lot of attention. Now, whether there's upside, whether there's downside, who knows? Okay, but it's definitely a smart move.
Eddie, I got like 8 questions, Eddie, in no time. Are the regulators going to come here on the spread that PayPal and Venmo identify?
Yeah, I don't know if the regulators will step in, or I think the regulators will be happy to sit back, certainly on the spreads, and just wait and see, a competition coming to this market, because I think that ultimately is, how you see spreads coming down. But regulations coming for the crypto market, that's for sure.
Eddie, nobody cares. What do you think about the Super League?
I mean, I think they should put it on a blockchain. No, seriously, it's disgraceful for soccer fans, isn't it? I'm not one of them, sadly.
Eddie, we'll leave it there. It's good to catch up. Eddie van der Walt there, Bloomberg Markets live blogger, on the latest in the crypto universe. Crypto, Bitcoin, just turning positive on the session, unchanged at 56,360. Tom Keene, what a rally that's been.
Yeah, it's been. I mean, it's absolutely crazy, and there it is, and there's different flavors and all that. I'm trying to be patient on this. I think people know where I stand on this, John, and I think the whole Bitcoin thing. I'm like, the pricing. I don't know.
I sense your patience, Tom. I sense that. Do you, Lisa? Do you sense patience this morning?
Oh, so much patience. Flavors, what's on your mind today?
Are you losing patience?
Maybe I'm going to get a third shot.
I'm in for the ride. So, Flavors, what's on your mind, Tom?
What's on my mind? We got to go to the source here. I mean, orange squash sounds so interesting and healthy.
Does it?
And good for me. Let's go to the source here. We thank the Tang store out at Amazon. Here you go, John. This is what my childhood was. I can't convey, folks,
That's where we're
how
at right
silly
now.
this
Sodium
was.
acid pyrophosphate. That was your childhood.
Yeah, this garbage was my childhood.
That explains
We would
a lot.
take it off the shelf, and you could be like somebody on a Gemini spacecraft, and you could drink Tang, and you got to be kidding me.
Is it a slow news day? Coming up on the show.
No, we were saved by Anita Bryant. Okay,
Lee
she
Farage,
sold us on oranges.
State Street head of America's macro strategy. Could be on markets, could be on something else. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here for now. Could be with you for the next 45 minutes too. No idea.
You feeling okay, John?
Getting through it. Don't know why I turned up, to be honest with you. I felt pretty bad this morning.
And we're helping out a lot, I'm sure.
Seriously, down 15 on the S&P 500.
Get vaccinated, folks, like John Farrow.
Me, today.
Yep. Get Lisa today. Get
Second
vaccinated.
shot.
Courage. Take someone with you. John took vet bill.
From New York, for our audience worldwide, this is Bloomberg Surveillance live on TV and radio. And I'm serious, I might walk. This is Bloomberg.
we could have an employment and productivity boom and a real change.
You're looking not just at the peaks, right? You're looking at the sustainability of these trends.
What we have to question is that have things structurally really changed?
What the bond market is telling you right now is not so fast. Fed has the upper hand.
It looks pretty clear to me that the Fed is not raising rates till at least probably the end of 2022, 2023.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast. Good morning on Bloomberg Radio across this nation and around the world, and on Bloomberg Television. A sight to behold. John Ferro with us after a vaccination. Lisa Abramowicz sometime today with a vaccination. And John, within all that is the good news on the pandemic and so much of the world, with the rest of the world really struggling. I mean, Philippines, India, and in this show, Tokyo has gone on some form of shutdown.
Yeah, it's a real struggle, isn't it, Tom? We spent much of the year so far talking about divergence between the United States and other parts of the world, and to some degree convergence between Europe and the United States maybe, but we have to be clear, and you're right, Japan, India, Brazil, line up the countries and we can line up the pain, Tom. There's still a lot of pain out there.
It's out there right now, and in the markets, you see it within the battle, over yield and over as the earnings have come out, use of cash. John, just as one example of use of cash, this train warfare in the Midwest of the United States.
M&A for Kansas City Southern, a bidding war potentially. Then we've got the capital return program over at Procter and Gamble making the news too. Tom, top of mind for me, I think many people are still spooked by the price action of last week. To see the data come in the way it did in America and to see the bond market rally the way it did really stimulated a conversation that Lisa touched on in the previous few hours. Is the bar too high? Is the bar too high for what will come? Right. Even though we beat expectations last week, and that was the confusing part of this for so many people.
HSBC reaffirms a 1, even 2-year 1% yield, Lisa, on the full faith and credit 10-year yield, usually a signal from IG and from high yield as well. Lisa, what do they signal now for government bond?
For government bonds, you're seeing basically what Phil Camporelli was talking about, this idea of reflation, not inflation, that we saw a plugging of the gap in some of the business activity last year, but we're not necessarily seeing a change in the overall economic conditions of low inflation and low growth. And that seems to be what's being signaled by the Treasury market. Of course, you do have the other side of that. A lot of Treasury analysts coming out and saying, I would sell this. So basically, the yields could go higher. Other people saying, HSBC in particular, this morning coming out and saying they expect the year-end 10-year yield to end at 1%.
I mean, John, conceptually, that's the heart of the matter. Do we reflate? Frankly, folks, in economics, there isn't a true definition of the word reflation. But, John, do we get back to February before the pandemic, or do we go beyond that to something new and better? The jury's really out.
So there's a difference between peak change in terms of the rate of change and cumulative improvement. And for the bond market, what you're going to see over the next year is immense cumulative improvement. Even if we've seen, just in terms of the rate of change, the biggest moves already in retail sales and maybe in some other indicators in the weeks to come. By the end of the year, if you've got unemployment with a 4 handle threatening 3, that is huge cumulative improvement that starts to push things tighter in the labour market. And that inflation conversation in that environment is going to go nowhere.
Well, we've got the earnings coming out here. We'll give you more of those as we go through the day. And, of course, the Apple soiree this afternoon. Netflix is this afternoon, John?
It is.
Is that
after
right?
the bell.
Yeah, Netflix will be fascinating as well. Futures negative 15, Dow futures negative 127. John, the level on the Dow, have a sip of Tang. The level on the Dow, 33,831. The VIX, 18.30. John, quickly, what do you see in the data?
Euro dollar 120 handle, we reclaim. And there's some really interesting calls out there. SocGen reaffirming their view with Kit Jukes, looking for maybe 125 to 130 into year end. I think Europe gets a little bit more interesting now the vaccination program has really improved. And the dollar story has just whipsawed so many people through Q1. Dollar weakness turned into dollar strength. Just as you get comfortable with dollar strength, the euro makes a move. It's brutal out there in foreign exchange for the majors at least.
It is brutal. There's no question about that. Mexican peso through 20 to a 19.89, stronger Mexican peso. Lee Farage joins us right now with State Street, head of America's macro strategy, writer of really cogent notes. We'll get to Liverpool, Lee Farage, in a moment. Right now, I want to get to your affirmation of a 130 call on euro. Can Europe stand that strong of a euro?
It won't be easy, for sure. But the problem they have is, what do they do about it? I mean, the bottom line is that the Fed is not moving rates anytime soon. So what you have is a very, very steep curve in the U.S., And that means for Eurozone investors, for Japanese investors, they can buy treasuries and they can hedge their FX. Right now, a Eurozone investor can buy treasuries, 10-year treasuries, hedge their FX for 3 months. They're earning 120 basis points over bunds, right? They're going to do that all day long. That means the U.S. current account deficit does not get paid for by the bond market. So you have a basic balance shortfall. In that world, the dollar has to go down. So we saw over the last couple of months, we saw this upgrade of U.S. growth expectations. We saw yields push up. Short-term momentum traders bought the dollar. We had a big underweight in the dollar. That got closed out. And now, as things calm down, the default for the dollar will be for the dollar to go down. If we haven't got more good news, if we haven't got rates going up, if we don't have a short squeeze, the default for the dollar will be this drift lower, drift lower, drift lower. And that's what we've seen over the last few weeks. And that's again where we are now. And this is why, for me, that's going to be the default this year. We'll have bouts of dollar strength, but they'll be short-lived, and then the default will be this dollar drift down, and that's how we get to 130.
Lee, just in terms of the deficit, can you help us understand why this dynamic is so different to what we saw in the previous cycle?
Well, the difference is the ability to hedge. The previous cycle, the Fed, from 2016, 2017 onwards, was leading the way in terms of hiking rates. Right? So they were hiking, no one else was hiking. So therefore, foreign investors couldn't buy treasuries hedged because the amount they paid on the hedge cost them all the yield premium they were picking up. So you attracted capital to the U.S. FX unhedged. If the Fed aren't playing the game, if the Fed are keeping rates down close to zero, in line with everywhere else, the hedging works. So if the hedging works, the dollar goes down, and that's the difference this time. It's the reaction function of the Fed. They're not hiking into this strength like they were in 17 and 18, which pushed the dollar up. If the Fed don't hike, the dollar goes down.
So, Lee, let's build on that. If you want to play that theme, what's the best way of expressing it right now?
Right now in Q2, I think we are getting to the state. I mean, I like euro higher, I like dollar yen lower, but they're drifts. They're slow, gradual grinds. I think we're actually in Q2 in a stage where EM starts to perform better again. We've priced in a lot of good news for the U.S., an awful lot of good news in terms of growth. Yields have gone up. Yields are now back in a range. So you have this sort of positive growth outlook. You have yields in a range. You're having no reaction from the Fed. That's sort of an ideal world for EM. But you've got to be selective. And you mentioned before about the COVID cases going up in various places. You have to be really selective. You have to be wary of domestic issues as well. We like MEX. MEX is sort of proxy to the U.S., sort of direct proxy, obviously gives you some yield. MEX is one of our favorites. We also like South Africa as a sort of reasonably liquid EM proxy as well. But we're wary of others. But there's value out there in EM.
Just to push back against the weaker dollar story, as we have seen the dollar strengthen this year on the strength of the economy, markets are discounting mechanisms. People are going to be looking to a Fed that will be tightening at some point. How concerned are you about better data spurring expectations for rate hikes even as soon as 2022, causing the dollar to strengthen despite all of these dynamics? That's what we've seen, Lisa. That's what we've seen. We've priced the first hike at the end of 2022. We've priced another 3/4 for 2023. What are the Fed dots saying? The Fed dots are saying they're not hiking through the end of 2023. And the rhetoric from the Fed is not changing. They've got a high growth forecast for the market for this year. They've got 6.5%. They've got an unemployment rate of 3.5% in 2023. And still they're saying we're not hiking rates. And you have to listen to Powell. The reaction function from the Fed has changed. Inflation, with average inflation targeting, they can ignore transitory rises in inflation. They can look through it. They're targeting the labor market. They're targeting maximum employment, not full employment, maximum employment, and maximum employment for all. They're looking for underemployment to come down. They're looking for low income to go up. All the stuff we saw in 18 and 19, Powell wants to get back to, and that's going to take time.
Lee Farage, very direct. Chris Collins of Bloomberg News felt we were fair and unbalanced yesterday with a focus on Manchester United. What's it like to be Liverpool, where last night you were tied with Leeds and your team is wandering off to the Super League? Were you medicated?
I will be if it carries on like this, quite honestly, Tom. Yeah, it's not easy being a Liverpool fan. Well, this season hasn't been easy after last year, which was a gift. And then the Super League news is not a positive in my mind.
Lee, I'm not sure how many people out there feel sorry for Liverpool fans right now.
Yeah, got that right.
I've got to say we're enjoying it a little bit. Lee, it's good to catch up. Lee Farage, State Street Head of America's macro strategy. I've got to say, that really Liverpool right now, Tom, is a little bit like the Yankees. When they suffer, some people enjoy it.
Yeah. Yeah. John, what are we going to see today? Seriously, are we going to see these teams banned from European play now or through the weekend?
I really, really don't know. What's going to be interesting is what happens with the players too. The threat to ban them from international tournaments.
Right.
And we have to talk about all kinds of antitrust issues. Alex Webb, actually, on Bloomberg Opinion this morning, I thought he wrote a really nice piece about what it could mean for the players. And he wrote that the European Court of Justice ruled in favour of a rival competition in ice skating of the International Skating Union on the basis that athletes should be able to take part in any competition they choose. So I wonder whether the threat on players at least holds. And I think there's all kinds of legal ramifications away from just the financial ones, Tom, as well.
John, I know you wanted to look at the space program as well.
I'm excited for
very
that.
Seriously now, a headline here. And the thing here, folks, it's there's been a lot of accidents recently in this jumble. And John, we're looking at a manned SpaceX flight review here now on April 22.
I'm waiting for you to make a comment about Tank.
Well, hold on a
and whether
second.
that goes with the SpaceX crew.
We didn't even talk about the helicopter yesterday, except
He
for
did.
a passing. He mentioned it.
He mentioned it.
But it was a big deal. It was exciting.
Afterthought had a brilliant observation at the dining room table last night. How can the helicopter fly on Mars if there's no air?
Well, that's the whole dynamic. That's the reason why this was one big step for international helicoptering.
She TikToked out to Matt Damon to see if he had...
John's laughing at me.
Did everyone have a drink last night?
Last night.
International helicoptering.
Yeah, helicoptering.
Infrastructure-y.
Yeah, you know.
Coming up later this hour, Ben Laidler, eToro Global
Actually,
Market
John,
Strategist.
it's Italian for AC Milan.
Thank you.
Campari and Tang is so good.
I bet it is. I'll take your word for it. Futures a little lower today. We're down 15 and off by 0.4%. Unfortunately, there's nothing transitory about this. 159.60. We're down about a basis point on tents. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. In Minneapolis, the jury resumes deliberations today in the murder trial of Derek Chauvin. He's the white former police officer accused of killing a black man, George Floyd. In closing arguments, Chauvin's lawyer says the viral video of him kneeling on Floyd's neck doesn't tell the whole story. Prosecutors argue that Chauvin violated department policy and training. Tokyo reportedly will ask the Japanese government to declare a state of emergency because of the coronavirus. That's according to the Mancini newspaper. Authorities have been stepping up restrictions to contain a surge in infections just 3 months before the start of the Summer Olympics. In Germany, Armin Laschet has won the battle to lead Chancellor Angela Merkel's Conservative bloc in September's election. That follows a potentially damaging contest with insurgent challenger Markus Söder, who conceded. Laschet is the chairman of the Christian Democratic Union, and he would be likely to continue Merkel's centrist policies if he wins. Johnson & Johnson posted better than expected first quarter results, plus the company raised its financial guidance for this year despite the setback for its coronavirus vaccine. J&J is waiting for a ruling from U.S. health regulators on whether use of its vaccine can resume. It was halted last week after reports a small number of people who received it developed rare blood clots. Former U.S. Vice President Walter Mondale has died. Mondale served under President Carter, where he was seen as redefining the role. In 1984, he was the Democratic nominee for president. Mondale made history by naming a woman, Geraldine Ferraro, as his running mate, but he warned voters to expect a tax increase and lost to President Reagan in a historic landslide. Walter Mondale was 93.
I went to my first movie this morning in an IMAX theater here in New York City, and as soon as the screen went bright, I said, I have zero concern about streaming because it's a completely different experience.
That was the IMAX CEO, Rich Galfond, there on the situation with theatres across the country, including here in New York City. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Your equity market shaping up as follows. On the S&P 500, a slight decline. On the S&P, we're down around about 14 points and off by 1/3%. Into the bond market, where yields are lower by a single basis point to 159.42. Euro dollar 120.50, up about 1/10%. Tom, I know you looked at the Deutsche Bank piece out earlier this morning. Still looking for 125 on euro dollar.
Yeah, and George, he's been out front on this, and you got to believe there's an adjustment. I don't know what the parlor game is, but John, to me, it's critical, and we're really at support on the latest range. To break out of this ever lower, ever weaker in dollar would be remarkable.
Yeah, and I think their view is that it's not unusual to see a 10 big figure range on euro dollar. We've seen 117 at the low end. Does that take us through 125 towards 127? Possibly, Tom.
Well, we'll have to see on that as well. Right now on streaming on Netflix coming out this afternoon, Paul Sweeney is the founder of Bloomberg Intelligence. I work with him, of course, every day on Bloomberg Radio. Really quite good at the measurement of securities analysis, and particularly on the nexus of content is king in our distribution as well. Paul, good morning. What do you expect from Netflix?
You know, I expect some pretty good numbers, Tom. This is going to be a tough quarter for them because they have some really tough comparisons. You think about where we were a year ago, just the beginnings of the lockdown, and that was actually good news for Netflix because people were we were stuck at home, Tom, and so we were all binge watching anything we could get our hands on, and they had a huge growth in subscribers in the first and second quarter of last year. So the comparisons are going to be really tough this year, but the long-term story remains very much intact, which is, for better or worse, Tom, we're all viewing more and more content via streaming services, and Netflix is right there.
In Oscar season, are we counting the beans, or do we have the ability to count the beans? I look at Mank, which is a Netflix product, a black and white film. It's one of the ones touted for the Oscars, and its box office is just under $100,000. I mean, I get it, there's a COVID and all that, but do you really know if anybody's watching this stuff anymore?
It's tough to figure out because, Netflix, for example, does not release viewership. There's no Nielsen ratings for this stuff, Tom. So, what they will do, they will selectively release data on this. But as you think about the award ceremonies, just for example, it all comes down to money. Who's spending the money to get the A-list content, the A-list writers, directors, actors, and Netflix is right there with a huge pocketbook. But you know what? So are a lot of other companies like the Walt Disney Company, Warner Brothers. Everybody has a streaming service these days. So the competitive landscape today for Netflix versus 2 years ago is just 180 degrees different. It's a much more competitive marketplace.
One thing a lot of analysts are looking at, Paul, is whether Netflix starts to crack down on the fact that everybody uses one password, that one person gets a password and then 25 people adapt it. And there's a question why Netflix hasn't cracked down sooner. What are the arguments on both sides?
The first one is technological. There's got to be some technological fixes here. HBO has been dealing with this for years, but the technology is coming, and they will, in fact, begin to enforce it. They being just the streamers in general, because they now all have, a similar issue, which is we need to make sure that we maximize the revenue for each individual user. And the two ways you do that is you make sure that you get each individual user paying for each individual account, and then you raise prices as well. So the streamers have that capability right now. And so I think we're going to start seeing a lot more of that.
Paul, before you go, I think we've got to talk about the football situation, but I wanted to talk to you yesterday from a position of the media and what this would mean for some of the broadcasters that have paid up for rights to see some of the best players and some of the biggest teams play football. What was your big take in the last 24 hours, Paul?
Yeah, John, this is a huge issue, which I know you guys have been talking about. And I look at it from the perspective of the media partners here, Tom. And I think I look at those teams over there in Europe and some of the leading teams, and we know who they are. I think they look longingly at the NFL and at the NBA in the United States, because every single year they know that in the NFL, the Cowboys or the Buccaneers or the Patriots, they have the ability to win the Super Bowl. And you don't have that in the Champions League. And I think they look at that and they say, gee, we would like a league where the big teams get valued at a higher level than some of the other teams do. And I think it's simply a money grab from my perspective, and it's really focused on the media rights associated with playing the big teams every year.
So let's build on that, Paul, because for me, we've seen the outrage in the UK and England. We've seen the outrage in Italy and Spain and elsewhere too. The additional football fan, though, out of Asia perhaps, in the United States, right here in America, is that who this is for? And do you think that the view of, say, the public in England right now that populates some of these stadiums on a weekly basis when we get back to business and can fill those stadiums again, their view matters less?
Unfortunately, that appears to be the take that we're seeing from some of these bigger clubs here. I think they know that their brands are global brands, and they have, as you well know, John, they have so much value in Asia, just for example, but really on a global scale. And the more that you can get some of these big teams playing each other, the media rights associated with that on a global basis would just be extraordinary. And if you're some of these big teams and you just come through the pandemic and your balance sheets look terrible, your income statements look terrible, you have a lot of debt, you need to generate value and you need to look anywhere you can. And I think this is simply, again, just from a media perspective, looks like a really strong move to try to maximize the value of those brands globally.
Yeah, Paul, really wanted your take on that, so I'm pleased we got it this morning. Thank you, sir. Paul Sweeney, Bloomberg Surveillance Radio, co-host joining Tom Keene in the next hour on Bloomberg Radio. That perspective, Tom, is really important because it goes some way at least, to explaining what's going on here.
I wonder if the hope and prayer, I have no idea if this is true, but I'll throw it out, John, as a theory, that they're hoping that one of the big digital fish just jumps in for a colossal amount of money and solves all this. You know, I just, Amazon jumps in, Netflix jumps in, I'll let you pick the company, Apple jumps in, whatever.
I do think that the idea here of a money grab, though, you kind of can't feel too sorry for anyone involved, John. It's hard to feel like there's a sympathetic character in the football
I
issue.
totally agree with you. I don't think UEFA or FIFA has the moral high ground. You know, I refuse to advocate for either position right now. I find it ridiculous. Lisa, away from that, you started this program by mentioning United Airlines, so let me get some news coming out of United right now. Domestic leisure demand, more than 100% right now. We're back. That's the message coming out of the airlines on the leisure side of things. On business, not so much. On international, not so much either. The CEO seeing fares returning to normal levels later in 2021. Though, Lisa, as you indicated from what we've heard from this company in the last 24 hours, the international story's got to return for this company to return to profitability.
Yeah, business travel took on a significant portion of the profitability of a lot of these airline companies, and it's hard to see international travel pick up to levels that we saw in 2019 very quickly, given the projections that Dr. Adalja was talking about, that we're not going to see a return to some sort of international consensus on the pandemic until perhaps 2022. They said, though, that they also see fares returning to normal. Well, yeah, domestic demand. There you go.
United down 3.4%. in early trading. From New York this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Coming up, Ben Laidler, eToro, global market strategist, joining us on this equity market. The airline's down for 9 straight days coming into Tuesday's session. Your equity market down 17. We decline 0.4%. Heard on radio, seen on TV. This is Bloomberg Surveillance. From New York City for our audience worldwide, this is Bloomberg Surveillance live on Bloomberg Radio and TV. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. The state of play this Tuesday morning, the scores look like this on the S&P 500. We decline by 0.4%. On the NASDAQ, off by 1/3%. On the Russell, down by 0.6. Switch up the board and get to the bond market. We look a little something like this on 2s, 10s and 30s. Yields in, not even a basis point on a 10-year, back to 160 on a 10-year yield at 160.30. If I could take a little look at the euro, I'm not sure if you guys have got that, but I'll bring that on my Bloomberg terminal. Euro dollar, there it is, 120.43 with positive 0.1%. Some really interesting calls in the mix. Reaffirming the euro dollar 125, maybe to 130 call at SocGen today. As you point out, Tom, Deutsche Bank looking for a mid-year price target of 125. Could get a little bit interesting later this year in the next couple of months. Christine Lagarde, the next stop, Tom.
We should explain to our audience that this is the deepest market. The reason that everybody in stocks and bonds and all is we look at this, and even those, John, in the equity market have to follow currency.
The epicenter of that, the City of London, for a long, long time. Coming up in the next hour in the Open, I'll be catching up with Morgan Stanley Wealth Management Chief US Equity Strategist and CIO, Mike Wilson. Have we seen peak rate of change, and does that mean you should get a little bit more defensive into earnings season? That the view, Tom, of Mr. Mike Wilson over at Morgan Stanley.
A lot of different opinions here on the equity market, with futures -18, Dow futures -153. We await earnings, including Netflix, later this afternoon. The Apple soiree, Romain Bostic and the team in the afternoon with a lot of coverage of what Apple's talking about. Right now, and this is a joy, Benjamin Laidler not only has done it once, twice, but indeed 3 times in a row. He's made a major bull market call and been right Right. Holding court at HSBC for years and then on to different projects. We are thrilled that Ben Laidler gives us a first interview with eToro, Yanni Asia's Israeli operation. It is big in digital and moving over to the equity markets. And Mr. Laidler will provide global market strategy for eToro. Ben Laidler, can you reaffirm now your very lonely double-digit equity return for 2021?
Yeah, I think so. I don't think it's a forecast anymore, though. I mean, we're up, 11% for the year. So I think it's really a question of sort of hanging on to what we've got, which is going to be, pretty historic, right? I mean, we've had, I think, only twice in the last 50 years have we had this sort of 3 in a row strong equity market. So, yes, I think we do. Valuations are very high, but I think earnings are just going to keep surprising. I think first quarter, which we're obviously in the middle of reporting right now, is going to be the latest, I think. But I still think with these sort of top line growth numbers being revised up and all this operating leverage, that this earnings story is going to keep delivering. And that, I think, really is the foundation here.
Given the Laidler bull market, what is your experience or guesstimate of what they will do with all that cash? We're already seeing buybacks being the flavor of the moment.
Yeah, I think you're going to see more of, frankly, everything, right? I mean, you're seeing more buybacks, you're seeing more dividends. I mean, sort of dividend and buyback strategies have recovered from, beginning to recover from how badly they did last year. You're going to see a pickup in capex as well, which I think is really important to keep an eye on, because I think, we're talking a lot about this year, but really what we should be, caring about is what next year begins to look like, right? I mean, consensus says 12% earnings growth for next year. That seems a little bit pedestrian compared to this year. We want to see more than that if this rally is really going to continue. And I think capex is going to be, an important part of that. And I think how consumers sort of spend down this sort of 15% sort of access savings they have right now.
Ben, you've been a stock bull. You have been right again and again. There is a question out in markets right now of whether a 1.6% Treasury yield in the 10-year is incoherent with the optimism that we're seeing in stocks.
Well, I guess there's 10 years of inflation history or 30 years of sort of bull market history that would sort of argue against that. But, to your point, I mean, I think bond yields are going to go up. I think, one of the reasons I think markets are so resilient is we've just been hugely stress tested here, right, with this bond yield tantrum, and sort of markets sort of survived. So I think bond yields are going up. I think equities can survive that as long as it's sort of a moderate rise for the right reasons, i.e., growth expectations continue to move higher, and I fully expect that to be the case. And just more broadly, bond yields are important, but it's not just about bond yields, right? I mean, bond yields were at 1.9%. Coming into last year, and markets were fine with that. And, bond yields are 0 or negative in the rest of the world, and that's not helping their equity markets. So, bond yields are important, but, there's a lot more to that. Corporate profitability, the earnings recovery, all of which I think is very, very healthy here.
Corporate profitability and earnings potential, is that isolated to the United States? Are you seeing the opportunity set shift to Europe or perhaps even beyond?
Yeah, absolutely. I think we've been in this sort of global rotation trade. I mean, it started off with China, sort of first in, first out, best performing major market last year. Now we've had this sort of US exceptionalism with the sort of vaccine rollout and the stimulus, and obviously US sort of led the world among major markets in the first quarter. I think the story sort of looking into the second half is the rest of the world. I mean, Europe's going to grow earnings probably twice as much as the US. So this quarter, if I look at where the economic surprises are coming from, and frankly, they're coming everywhere, but they've been led by sort of Europe and the UK. So I think as you sort of look further out, this, I think as Europe begins to get its act together on the sort of vaccine rollout, which I think they will ultimately, I think you begin to look for some sort of catch-up performance there, where valuations are cheaper, earnings more depressed, and it's a much bigger sort of cyclical component to those indices.
I mean, Ben, so far year to date, SPX up 11%, and the big surprise there has been the reaffirmation of big tech and sort of the story. So when Ben Laidler was right the second or the first time as well. Your thoughts on big tech? Do you participate with them, or is the international story so compelling you got to go there? Which is it?
I think the leadership is going to be sort of international plus sort of value. But, and it's a big but, you have to believe in tech, right? If you don't believe in tech, it's just got so big, then equities just don't work. And I still think the tech equity story still works. It's a different story. I mean, it's sort of this longer-term structural story, which I think is going to keep giving. I mean, growth is still going to be very good. There's big moats here. There's high profitability. None of that is going away. But here and now, the catch-up trade is the value. That's where you're getting this, 4 or 5 times earnings leverage to what's happening on the top line.
And Ben, there is a question as you talk about the global look for the opportunity, and you say that China was the first in, first out. I want to bring you these headlines from a PBOC member, basically that China has deficient equity capital. It has insufficient long-term capital, and this is why they have such high macro leverage. This kind of feeds into the People's Bank of China's effort to reduce leverage in the system, moving in the opposite direction than a lot of other central banks around the world. How does this affect your view on the assets in China, which we have seen underperforming pretty consistently over the past month at least? Do you think that that underperformance will continue based on where they are in the tightening cycle?
So you're absolutely right. I mean, they are at a different point in the cycle, right? I mean, the central banks just held rates at sort of 4%. For 1 year, 1 year rate. I mean, look where the rest of the world is, right? So, they're at a different, point in the cycle. But I think there's sort of 2 things going on here. I mean, there's this sort of cyclical story, which I think incrementally is going to tighten. But there's a long-term sort of structural story. I mean, they are going to keep opening up that capital market, both on the equity side, and on the fixed income side, to attract more foreign capital. And I think that's going to dramatically expand the sort of bottom-up opportunity set for sort of fund managers going forward.
Ben, I want you to address what I call the Friday gloom crew. There's a cottage industry, at least in America. I don't know if you see it over in the pond over in London, but there's a cottage industry that wanders out Thursday evening into Friday and reaffirms and re-rationalizes the walls of worry that are out there. How do you respond to that industry?
Listen, I want I want that wall of worry, right? If it didn't exist, then where's your incremental buyer coming from? I actually think markets are becoming more secure, not sort of less secure here. And I guess what I mean by that is the breadth of this recovery is now dramatically different than it was sort of last year. I mean, it was all tech last year. Now it's sort of everything. It's sort of this everything rally right now, which I think is sort of much more sustainable. The threats to the rally, I mean, the Fed making a sort of policy mistake, I think they've been very consistent in their sort of messaging. So I think that risk has sort of come down a bit. And the sort of investor over-exuberance, I think the market's been very smart. I mean, you sort of pull back in IPO performance, pull back in sort of EV performance, pull back in sort of solar. I mean, all these sort of micro sort of bubbles that the market was maybe getting a little concerned about have all sort of, pulled back a little bit. I mean, that's not to say I'm completely complacent. I mean, earnings do need to really keep delivering here with valuations where they are. But, actually, I think risks have been coming down a little bit, actually, not going up.
Ben Laidler, thank you so much. Congratulations for the new effort with eToro. Mr. Laidler, of course, is enthusiastic about the market once and then twice and 3 times. I can't say enough. I can't say enough, Lisa. The first call coming out of, it's ancient history now. I think it was coming out of 18 and into 19, that ugly Q4 that we had way back there. Boy, was he lonely.
Yeah, although very much right. You know what's caught my eye this morning, aside from Tang and Orange, what was that?
Orange
something
squash.
or other. Orange squash. Over lumber prices. You know how we've been talking about how much they've been increasing? And they've increased something, 60% year to date. But interestingly enough, wood is actually about the same price. It's something that the stumpage fee, basically how much just a log sitting there is pretty much the same as it was in 2016, even as lumber prices increased dramatically. It just shows some of the inconsistencies in the market, how basically, whether it's labor shortages, supply chain disruptions, or whether it's sheer speculation in certain markets, some of the weird aberrations in the market, I find this really interesting.
I agree with you totally. And what's to me so important, Lisa, is I think the pros would not summit together. It's lots of individual stories out there, starting with Long Beach and the shipping from Asia and all those bottlenecks as well. And it feeds into, I guess at some point the public just says, no, we're not going to pay for these new inflated prices, but we haven't observed that yet, have we?
And there's a tension here between strains that will ease up as the pandemic fades into history versus things that will actually be sustained price increases in common goods that we get every day, like your Tang, like your Senka.
Like the Tang. We say to all of you, have a good morning. We're going to continue. John Ferro steeled for another hour on Bloomberg Television. Paul Sweeney will join me on radio, and we'll drive forward. Netflix this afternoon, and that important Apple meeting with our Mark Gurman's reporting. Stay with us on radio and television. Good morning.
With the First Word News, I'm Ritika Gupta. Day 2 of deliberations in the Minneapolis murder trial that sparked a nationwide debate over police use of force. A jury is deciding the fate of Derek Chauvin, the white former police officer accused of killing a black man, George Floyd, during an arrest. Prosecutors say Chauvin violated department policy. Chauvin's lawyer says the viral video showing him kneeling on Floyd's neck doesn't tell the whole story. The president of Chad has been killed on the battlefield in a fight against rebel forces. Idriss Déby Itno ruled the Central African nation for more than 3 decades. He was re-elected April the 11th. It's not known why he was visiting the front lines. The military says a transitional council will be headed by the late president's son. Boeing 737 MAX got a boost from the jet leasing sector. Dubai Aerospace Enterprise announced a deal to buy 15 of the planes. That adds evidence that demand for the MAX is reviving after the model's almost 2-year grounding. The order for the 737 MAX 8 is worth about $1.8 billion at list prices. User growth at Netflix probably hit a speed bump in the first quarter. The streaming giant reports today after the bell. Results are likely to show that new signups slowed by 60%. That follows a surge in growth last year as the coronavirus limited out-of-home entertainment. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
If the economy continues to gain ground at the speed that we're seeing right now, then things may play out quite a bit differently. I think most companies are pretty flush with cash right now and sitting on that cash and waiting to deploy it. So there's really not much need for a lot of borrowing at this point. There's certainly going to be kind of this one-off, blowout period.
Stephen Stanley of Amherst Pierpont there with his informed opinion on the American economy. Our opinion is the markets today are most interesting, and the debates of the moment are really tangible, whether it's on yield, whether it's on equity market, up or down. Ben Laidler of eToro just on moments ago, very optimistic on these markets, others negative. And then there's the simple raging debate, the heat of the moment we're in. For all of my years on Wall Street, the heat of the moment is usually centered somewhere down the trading floor where there was a big, thick stack, almost like a book, of pink sheets. And they were the securities that were unregulated, securities that were frontier economy, less than over-the-counter as well. One Barry Ritholtz, Bloomberg Opinion columnist, takes great issue with David Einhorn's comments with Greenlight. David Einhorn's comments that the pink sheets are a metaphor for this great economy in these unregulated times. Barry, you're at 30,000 feet. Einhorn's with the pink sheets. How far apart are you?
I don't think we're apart. I think, and let me preface my remarks by saying I'm a giant fan of Einhorn's work, and he was one of the first people who identified Lehman Brothers as technically insolvent. So I take everything he says very seriously, but he's just wrong across the board about all of the things he suggests regarding this idiotic $100 million deli. Let me start granular and say in 2015, I wrote, I was looking for disconfirming evidence. We all tend to go out and look for things that confirm our belief, but I was bullish and said, let me find something that might make me less bullish. And I found similarly on the pink sheets, $100 million grilled cheese food truck. To be fair, they owned 4 trucks, not just one. But then again, those are depreciating assets. They didn't own the land underneath the way the deli does. And it proved exactly nothing. There are always garbage companies on the pink sheets that have crazy valuations. P.S. GRLD was the stock symbol for that company. They stopped trading. I wrote that in 2015. They stopped trading in 2019 and closed last year. So to draw a conclusion from an outlier is just bad rhetoric.
But Barry, there is a question, how do we know when something is idiosyncratic, and we made that a drinking game, so go ahead, versus a symptom of a broader problem?
That's a fantastic question, and the answer is don't show me one outlier. I was in a dinner some time ago when people were debating a big point, and I always cringe whenever someone says, well, my aunt's mailman tells the story. Just stop. This is an anecdote. A single example is an anecdote. Data is not, anecdote is not the singular of data. Data is not the plural of anecdote. When you could say, hey, relative to all these other factors, this suggests that the market is wildly overvalued. That's a very different argument than pointing to a single company and saying, hey, look how ridiculous this is. There are always ridiculous companies out there. And in 2015, since I wrote that, the market has doubled. Right. And so you can't just look at a single thing. P.S. I was kind of shocked to see the claim, well, this is proof that the SEC and the regulators aren't paying attention. By definition, if it's on the pink sheets, no disclosures, no regulation, no accounting, no GAAP, nothing. That's why the pink sheets are filled with shell companies and bankrupt companies. If there's a piece of garbage company that should be worthless, it's going to be there. And they're all too small for anybody to arbitrage them back to reality.
Barry, I take your point, and I think that it is a well-taken point, especially at a time when we see so much money flooding into the financial system. And we're talking about a deli that was valued at its peak at $113 million, and trying to use that as an example representing the entirety of a multi-trillion-dollar financial system would be remiss. At the same time, there are many instances of this. I was looking at a story this morning of Dogecoin, which was started as satire, a satire cryptocurrency. Right. It now has a bigger market capitalization than either Ford or Kraft of $50 billion. This is, by definition, started as satire, as a joke. I mean, at what point are there enough of these stories to start ringing bells?
So Rob Arnott of Research Affiliates put out a very interesting, insightful piece on EVs, but you can apply the same thinking to cryptos. And he references a professor at Caltech named Brad Cornell, who uses the phrase, quote, big market delusions. And what that means is when a sector is priced as if every member of that group is going to be the outsized winner. And he uses electric vehicles as an example. You can have Tesla and Lucid and NIO and the 24 startups plus all of the internal combustion incumbents from Volkswagen to Ford to GM to Toyota. You can't have all of them be the majority market share. So you get this collective delusion. Right. Eventually, the losers fall out, and you're left with a handful of winners. That happened with computers, and it happened with television, radio. It happens with fiber optics. Every new technology leads to that. We will probably see something very similar to that in crypto, with maybe it's Ethereum and Bitcoin, or maybe it's some combination, and the rest of these become worthless. But right now, we're dealing with that term, big market delusion, when the whole sector is ridiculous and they're priced as if they're all winners, when we know there'll be one or two winners.
Barry, I got to leave it there. We're out of time. Barry Reynolds, thank you so much. Really important on this move from 30,000 down to the acclaimed pink sheets of another time in place. Lisa, we're so qualified to talk about this. Ferro's exited. He's going to go start his next property.
Oh, dear Lord.
And the combination of my knowledge with one L. Abramowicz, I mean, folks, this is why you watch on television. This is why you listen on radio. The Prime Minister of the United Kingdom no action is off the table to stop Super League.
Wow, you and I adding value to a conversation about football. Right now, John is just shaking his head and saying, I'm glad I'm not on that set. This idea here of this not being an inevitability to create a Super League to compete. I'm not even going to start. Tom, honestly, I'm just
wondering
mocked.
how President Biden, or for that matter, good President Trump, how they would weigh in on this.
Is that your question? That's your one question. Are we going to get a President Trump discourse or whatever? Discord.
It is serious. I guess there's the Europeans could ban some of the teams from playing some games in Europe, and then the Premier League could ban some teams because they went over to Europe and.
Wow, we're really nailing it home. Basically, the overarching
idea here. Somebody who actually knows
yeah,
what they're
let's do that.
about?
But I will say that the overarching idea here is UEFA.
No.
I'm not even going to try. Go ahead.
On, they want to be like the Boston Celtics. That's all they want to do. Balance of power. Bain Capital's owner of the Boston Celtics, Steven. He'll be on. This is Bloomberg. Good morning.